Trade brilliantly with Schwab.
All right.
It's possible.
We going live.
Not 100% possible.
Your smile, Carl.
Live.
Your number one broker is here to welcome your new little
Three.
dependent. Actually, we
That's
invest
not,
in
it's
Schwab.
definitely not that hard.
We have everything we
We're
need
live right
all
now.
in one place.
You know that.
I can set up for college fund.
I've been learning about trading strategies.
Schwab helps me generate
That's my account.
All this Schwab is everything you need. It's making me cranky.
Does somebody need a nap?
Super easy possible.
Invest your
Bro, I'm
way
not here.
with Schwab.
Intern.
I give you all these trades and all this other stuff.
That's where I get all your office supplies.
Because I done gave you
Your golf balls, your fancy coffee, your giant TV. It's everything in one place.
I think it's
like
bro.
What?
Schwab. Everything investors need.
Why are you even saying that?
Come again? Yeah,
It's
Schwab
too
they can do
early, bro. I
everything.
just got done
Invest,
crying, bro. I
trade,
don't wanna
get
cry
full
again.
service wealth management, and
That's what you was doing?
I wake up, y'all hurting my feelings. I just get in here, y'all
We have
hurting
to
my
buy that now.
feelings.
That's what you was doing?
Yeah, bro.
Invest your way
But you
with
crashed.
Schwab.
I had to clean my computer off. People stop the shit in the chat. I asked y'all to defend me.
Good morning, everybody.
That didn't
Welcome back
even
to
defend me
Opening
in the
Bell.
chat.
We're going to count you down to the
Y'all
start of
ready to talk
trading.
about my
It's the
computer dirty, too.
7,000 here. A lot of tech on the way.
I don't care.
Up and away, and more after the bell. Sam Bottas is with me here to talk about what we're watching on Wall Street. So glad you're with us. We have a lot of those Mag 7 names after the bell. And it's bedtime.
Yes, what are we not watching on Wall Street this morning, Nicole? That's what it feels like. As you mentioned, the future's pointing to a little bit of a mixed start, but we are in arm's length of that 7K. Let's see if we hit that, as we very much have seen that rotation back into the S&P 500 and the NASDAQ. Obviously, we see the SPX with a 5-day winning streak here. Of course, we have seen this positioning into what is going to be a massive, massive week, and particularly today with, of course, the FOMC meeting and then the Mag 7 names getting up and running as far as the first cabs off the rank there with Microsoft, Meta, and Tesla. So going to be hearing from those names. We are also absorbing and digesting some of these earnings this morning, particularly when you look across the chip space. I'm talking Seagate, which of course you have run through with that strong quarter there, Nicole. A lot of price target boosts off the back of that. ASML, record bookings there. We've got $15.8 billion worth of orders, 1,700 job cuts. We've got 12 billion euro in share buybacks now. We've had SK Hynix out in South Korea also overnight, smashing records as well. This has all been really good for the memory trade. It all goes very much hand in hand. And of course, we've had China now saying that it's going to give the green light to the first batch of the H200 chips from NVIDIA. So watch some of those Chinese names today. We had a nice rally on the Hang Seng Index over in Hong Kong overnight off the back of that. So names like Alibaba, for instance, which is one of the companies that is in this batch, along with Tencent and ByteDance as well. We have heard from Starbucks. We're seeing progress very much on the turnaround there. But of course, across the tech space as well, we're also seeing SoftBank with a $30 billion reported investment now in OpenAI, so even more money going into that. But then across the commodity space, of course, gold punching above that 5,300 now. We've got silver at 113. Look, the dollar is stabilizing this morning at 96. Obviously, we are still hovering around these 4-year lows. The worst drop yesterday since we saw since April. But President Trump seemingly not too concerned about that. In fact, his comments were that he's not worried, doing great, and obviously comfortable with these levels at the moment. So obviously, this is something that we're going to be watching ahead of the FOMC, with, of course, the 10-year looking pretty stable. It's not so much about what they do this afternoon, Nicole, as we know. That's pretty much well baked in at this stage. It is very much about what they say come later today.
Yeah, it's all about the language, right? And whether or
Who y'all
not
talking about?
he sort of insinuates that there will be no cuts between now and May when he loses, changes his role, and then, will Trump announce the next Fed chair if that comes up? Let's take a look at Amazon.
Yeah, so Amazon laying off 16,000 jobs now. This is the latest announcement coming from the company this morning. So it's planning to shed corporate jobs here, and this would mark the second round of mass layoffs that we've actually seen since October. So we've got the stock pointing up today, extending on the gains we've seen yesterday off the back of some other announcements. But obviously, we've seen these ongoing efforts now to try to cut down the workforce, try to reallocate some of that capital into other parts of the business, particularly artificial intelligence. We did hear about those job reductions back in October, as I mentioned, 14,000 employees. I'm just looking at the blog post where they announced that. So as I said, 16,000 roles across Amazon. They're obviously going to be offering most of their US-based employees 90 days to look for another role internally. Then obviously they're going to be helping some of these employees And this very much is to do with the fact that they are looking to, be a little bit more strategic about where they're obviously reallocating some of that capital with respect to strengthening the organization. And they say reducing layers, increasing ownership, and removing bureaucracy, they say. So obviously this is another high-profile corporate in the tech space, which we've seen another round of
Turn them
layoffs.
down.
The
Good
street
morning,
is celebrating,
everybody.
obviously, this today, at least rewarding
I hope
the
y'all brush
talking
your
about
teeth
stocks, bro.
before
What
y'all
you
talk
mean?
to me.
the hope that this will be
Y'all at
real.
95 cents was my first purchase.
You talking about nothing,
July
cuz.
11th.
Feel me?
Yeah, I hope they brush their teeth before they talk to me, though.
Could be a
Hold on.
news.
All right, market's open, bro. Where's your bill at, man? Where's your bill?
I don't know. I'm about to take profit.
Bro, that nigga don't even know the market open, bro. Wait a minute.
Where's your bill at, bro? That's what I want.
Oh shit, Melania Trump fucking rang the bell.
Take profits on that cute play, bro.
Off the NYSC.
That's some
She got a new movie? Melania. Okay.
His wife?
Yeah. She rang the bell at the NYSC today.
Oh, for real?
Yeah.
That's what's up.
Pretty exciting to see all three of them up there
She
today.
got a new film
And
coming
are
out.
we going to see 7,000?
It's crazy though that she rings the bell in the New York Stock Exchange. I'm about one day I'm gonna lease a seat from the NYSC and just trade there one day.
You don't get a hat unless you
Just
Oh,
to
you
do
gonna
it
be on
one
the
day,
trailer
just to say
floor?
just to say that I did.
Right
Yeah.
now, the high,
I
it
know
looks
this shit
like
ain't right, bro.
we
Ain't no
did
way I'm
hit
up 3,000.
7,002.
All you gotta do is
7,002, there it is. You see it
at
when
least
you're
one
Probably
of the
odds are
seats.
getting manipulated.
Okay. The NASDAQ 100 up
The
182
seats are probably, if you want to buy a
points.
seat,
The
it's
Dow
probably
is
like
8
1 point
and
some
the
million,
Russell
2
is
million
also
maybe
gaining. Oil and
to
gold
buy
are
a
higher.
seat on the
Gold is
floor,
soaring. It's
but they you can lease it. They
$170
lease it
today.
for like
10-year bond yield
10,000
sitting
a
at
day or something like
425.
that.
Oil at 63 and change.
I'm gonna buy it
We are
one
seeing
day. I'm
tech
gonna just
leading
buy
the
it
way.
just
Of
to
course,
trade
we
them and
just
just
finished talking
to
about
say
some
that
of
I
those
traded
names
on
in
before.
ASML and Starbucks.
That's it.
Energy,
For real?
materials,
Talk to that
also
old
helping to
white
lead the
dude.
way. Consumer
Yeah,
discretionary,
you talking about
and names like
what's his
Seagate
name?
and
Peter
Starbucks
Tucker.
and
Peter
F5
Tucker,
are the best
yeah.
performers on the S&P
Hey, we got these
500.
gold
Joining me
Bro,
right
that
now,
nigga
take
Peter
a look at
Tucker,
some
bro.
names
That's what
in the news. Diane King
That
Hall,
nigga's a
Texas
legend in the
Instruments
stock.
is first up. Diane, great to
Yeah, good to be with you. And
Put
similar
the
to
bitch on
the
the floor,
broad
bro.
market
Yeah,
momentum, we've got
they
some
all
gains for
bullish, bro. They're
Texas
always
Instruments
bullish, bro. All
off
the
the back of
pieces
its
always
quarterly
bullish. I'ma
results.
come
And it's
in.
more about like
I'ma
what
come.
does the
I'm be the
road
only nigga in there
ahead
taking
look like.
flips
It's a
one day.
strong
Yeah,
outlook
man.
for
You know what I'm
Texas
saying?
Instruments. We'll get into the trailing quarter from
Yeah,
now.
yeah,
Adjusted
taking
EPS came in
flips,
at a
nigga.
buck
If
27.
my
That was
trade
actually a
go
little
100%,
weaker than
they gonna
expected.
look at me
Revenue
silly.
coming in
Yeah.
at 4.42 billion, just about in line with estimates. But
I
it's
see
really
that
again
nigga Frost that
about the
video, bro.
outlook
I
from
said, bro,
here.
you gotta
Their
watch the video.
Q1
Like,
revenue
beats
guidance,
on.
they're
Listen to
guiding
this
for
nigga,
between 4.32 to 4.68 billion. So that is better than what the street was looking for. EPS Q1, they're guiding for a buck 22 to a buck 48 versus the midpoint the street was looking for between a buck 35 to a buck 26. So again, it's really about the forecast from here. And Texas Instruments, while it doesn't make these AI GPUs, it's analog, it's power management chips. They're critical to data center infrastructure. So that business is growing, and it is growing fast. Data center revenue surged 70% last quarter, makes up a good portion of sales. So management is starting to break that out separately. So it's not the same old company. It is leaning into where the future is here. So the AI data center is essentially showing up as a new growth engine for Texas Instruments. Again, data center revenue surging 70% in the quarter. They're going to start breaking out that data center revenue going forward. So we'll start to see what that looks like more. The industrial market recovery, you saw that gain some steam here. That rose in the high teens percentage in the fourth quarter. It was broad-based across
Well, that's how I
automation,
understand.
industrial controls, and embedded systems there. Analysts say that that multi-year analog inventory glut is over. So that bodes well for them. There was a weak spot, personal electronics, that fell in the upper teens percentage revenue there. So that's a weak spot there for Texas Instruments. But shares moving higher today.
Yeah, look, it's the guidance. No one seems to mind the miss as long as you're giving some good guidance. Because a lot of these names have actually been beating the street, but then move lower. But I guess the good guidance really gives it. And how about a little celebratory moment for 7,000?
I know, right? Oh my goodness.
500 and some of the names in tech and energy and some of the areas that have really led the way this year when people were worried.
Yeah.
Next up, Starbucks. That too has an up
A Java jolt for Starbucks. And once again, this is not about the trailing quarter. This is about to be on board with this. In terms of adjusted EPS, it did come in at 56 cents a share. That was light of expectations. Revenue did beat, so it was a mixed quarter for Starbucks. Revenue coming in at 9.92 billion versus the street looking for 9.63 billion. But they're back to Starbucks turnaround. That's gaining traction. Traffic growth, you saw that higher for the first time in 2 years. CEO Brian Nichols saying that the strategy is ahead of schedule there. So you did have some pressure on margins because of some turnaround related costs, higher coffee prices. They have some tariff impacts, but sales and traffic are that key bright spot there. Again, revenue better than expected. Global same store sales, that's up 4%. Traffic grew 3%. So again, you know, to some that might not sound a lot, like a lot, but for Starbucks, this is the jolt that it needed. It has some momentum here in the U.S. It also had holiday strength. They talked about that viral. You remember? I wish I had one of those, the barista cup that was shaped like a teddy bear. Oh my gosh, it was so cute. It was a viral moment, and it created, you know, people would come in the store, would come into the cup. You buy something to drink, you buy, you know, a little something to eat off the menu. They said their holiday menu was the best day ever for North American stores.
Yeah, they've really been streamlining. They cut a lot of the menu down. They introduced the Dutch chocolate, some protein drink, a pistachio drink. They're really trying to get back to what Starbucks was.
That's right.
And that really has helped. I mean, the stock is up 20% in 2026. Imagine if that's the stock you bought. Amazing. And here up 5% today. Last but not least, you have AT&T. I think I saw a down arrow.
Yeah, that's been all over the place. In the free market, it was, you know, it felt like investors were trying to kind of make heads or tails of its results. So they did do better than expected. It was a solid quarter for AT&T. They beat expectations on the top and the bottom line. Adjusted EPS coming in at 52 cents a share. The street was looking for 46 cents. Revenue coming at 3.47 billion. Street was looking for around 32 billion. So again, it was a beat there for AT&T. Look, listen, all of these wireless companies have been in a pricing war for customers. Shares are moving higher now, actually up more than 2.5%. They had steady customers. They've got reliable cash flow. They've got some shareholder payouts. You know, profit was actually slightly lower than a year ago. Some of that has to do with some one-time issues there. They added 421,000 new postpaid phone customers. That's in line with estimates. Churn staying below 1%. That's a good sign. Customers are sticking with them. They're not taking advantage of that pricing war that they were having, the competition, which I think ended at the beginning of this month, which had been going on for honestly more than a year between the AT&T, Verizon, and T-Mobile. Bottom line, wireless customers sticking around. The broadband growth, they had growth there, 283,000 new fiber customers, 221,000 internet air ads. So there's some growth there. All right.
On FOMC days, I typically only take one
I
trade
didn't mean to interrupt you. Was there more?
during the day,
No,
and
that's
if
okay.
it misses, then I'll just wait for FOMC.
One thing that is
FOMC.
shrinking, I always have a little bit more. One thing that is shrinking, business wireline, that's down 7.5%. But look, they built more than made up for it elsewhere.
All right. You know, you want to know the truth? I think Jay was there, and I said, let me try and grab a 7,000
I typically take one trade during the day,
so we
and
can
if
get
it
it on
loses,
social,
then
and
I'll
so
wait for
I wasn't
FOMC.
100% listening, and that's why I jumped. Diane King Hall, great to see you. Always. Jay Woods, we need you.
Federal open market
7,000 on the S&P 500.
they
Where's that?
they release statistical data on like interest rate hikes, the housing market, about rate cuts, and a whole bunch of other bull crap that I don't watch.
Damn. This is my country.
Because I don't watch that. I don't watch none of that shit. I trade the charts, bro. I don't care what news is talking about. I don't care none of that. I don't care if news like come down, nigga. I trade my chart here. Yeah. Because 9 times out of 10, the chart will give you the 9 times out of 10, the chart.
A lot of preliminary lawyers,
Regardless of what the
closer
status
look,
is.
you realize
Well, I will say,
The setup
compared to our size,
that's definitely a positive.
our years of experience.
Oh yeah, nah. If you don't know how to trade, don't trade it. Definitely one of the days.
SLG
something, bro. Bro, give me something, bro. Trey to the
Dunkin' Donuts.
Give me something, Trey. Hey, Trey said get him and me something.
No, I didn't.
Well, Trey,
Others recap the news. I hope you read between the lines from what's moving markets to what's next. With sharp takes
yeah,
and
I'm always hungry,
opinions.
bro. Give me something,
Follow me
bro.
on all
Hey, don't
social
speak
media
for me,
platforms
nigga.
at Diane King and connect with me on LinkedIn.
Hey, leave my help me.
I'll give you 3 reasons
What?
why.
Oh, you want me to eat at the pantry? Got you. Say less.
Big
Eat at the pantry? Yeah. Say less. I got some applesauce right here anyway.
Daily, you start to realize what kind
And I got some vegetables too.
It's been with me for a long time. Jim, but then
Yeah, tell me say less.
probably 20 years ago, Jim's really been there to answer any questions I ever have. Makes a huge difference when they're paying that extra.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com. Welcome back to Opening Bell. Tyler Harridge is with us, partner Vertical Research Advisory. We wanted to know your assessment of the markets. Look, we're hitting 7,000 today. It's a big deal. It's a nice round number, and people love to see it. I don't know whether or not we will close above that area, but tell me more about what you think about the market and how you're feeling.
The vegetable cereal, boy.
Hi, Nicole. Yeah, it's great to be back on here with you, especially on such an exciting day.
Hey,
We've
somebody
got
find a good
big
LG
earnings,
stock on
big FOMC day today as well,
Let's
and
start
we
from
got
Cash
all-time
App.
highs.
I
I mean,
was about to
what
blame
else could we
trade-
ask for here?
Not trading,
In our view, this really is still an early innings move higher. We've continued to see tech leading the way. Tech exactly what we want to see. So,
Well, you always have all the bad days.
2.5% on the month here. So it's been a pretty incredible move, and we look forward to continuing this.
Understood. So what do you think about the mega cap tech earnings? Do you have a favorite? Or, there's some concern about the CapEx spend or the cyclical funding. Some of your thoughts.
Yes, we'll certainly be watching today. Our favorite one here that we'll be watching later today is Tesla. And for all of these stocks, not just Tesla, looking beyond the headline numbers to these earnings calls, that's what we'll really be watching for here today. It's not the news that matters, it's going to be the market's reaction to that news. So we'll see how they look after their calls this evening. But as far as Tesla goes, is there really any more exciting earnings call than this company? So that's really what we're looking forward to this evening there, as this company is really on the verge of becoming the most transformative company on the planet in our view. So looking forward to what they have to say today.
Yeah, understood. I mean, when you think about the Fed, so many people think maybe today won't be a big day, but it really could be a big day. We know we're not getting a rate cut, but there's so much that could come out of, in the language today.
Exactly. I think as far as the announcement goes, it's been pretty well telegraphed that this should be uneventful, hopefully even boring to some extent. And the real action is what we'll be watching for today. The moving action will be the Q&A. We've seen it so many times where when Powell takes the microphone, the markets move. So that's what we'll be watching for here. In our view, they should likely be cutting rates today when you look at their favored gauges of inflation, like PCE. Depending on which measure of PCE you're looking at, they're roughly 70 to as high as 200 points above the neutral rate right now. So there's really one question that we would love to see asked of Jay Powell today, and that would be, why doesn't the Fed take a more modern approach to measuring this data, real-time inflation data like we see with Truflation? What's holding the Fed back from that? And is that something that we could see in the future from the Fed?
Right, understood. Let's talk about your stock pick of Tesla. I was just saying how SpaceX may have its IPO in June when Elon Musk says there's a very rare planetary alignment. It also aligns with his birthday.
SpaceX and Elon Musk here. Is Tesla your pick, at least in part, because of the excitement that will surround SpaceX, or is it a Tesla story?
Well, I love the SpaceX story. I'm a huge space nerd as well, so that to me is very exciting. But as far as Tesla goes, I think we can look beyond SpaceX, and it is really a Tesla story. As I said, this has the potential to be one of the most transformative companies on the planet, and they're really undergoing an evolution right now from a car/tech company into an integrated AI company, a robotics company, a logistics company, and potentially even an energy platform as well. So there's so much to be excited about. Again, I do think that it goes beyond just SpaceX or really any of the stories I just named there. So what we're looking to hear today, we're going to hear more about full self-driving and the rollout here where I am in Austin, Texas, of the Cybercab. The Tesla Semi, the stories like that have really kind of flown under the radar a little bit. Then, of course, Optimus. Then Tesla Energy and Tesla batteries. Those are the stories that I think will continue to move this company forward. So if we do see any kind of a miss on earnings today, on revenue or deliveries, we're really looking past that, and we want to use any weakness as an opportunity to add to our position.
All right, and just quickly, is Snowline Gold and Galaxy Digital? Tell us more about those.
Yes, well, I mean, what an incredible run that gold has been on here. I think going back to the last year, you'd be hard pressed to find a bigger bull on gold than us here at the VRA, and it's even exceeded our expectations. But when gold is on a move like this, the real leverage exists in the miners, and specifically the junior miners. Snowline Gold has been our #1 pick, but there is a lot of undiscovered value in this group. Most of these companies were built for drilling programs designed with gold at or below $2,000 an ounce for below those levels for their break-even rates. So based off of that alone, there's a large portion of this group that's really set to print money in the coming years.
Yeah, understood. Tyler Harridge, thank you. Vertical Research Advisory. Great to see you. Really appreciate it. Thanks. Coming up, the key levels to watch, the charts to watch. Kevin Green is standing by, and he'll share that with us. We crossed 7,000 on the S&P 500. There it is, 6999.30. We'll be right back.
What's happening?
Sometimes, you could have done better. Same goes for where you invest.
What happened to that nigga
Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable content. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. Let's take a look at the key levels to watch. Of course, the 7,000 mark was crossed here on the S&P 500, and we're seeing the Nasdaq up 5 days in a row. Tech has certainly been a leader, and we're going to get much more from tech this afternoon, and so that's something that people are watching closely. We want to know the key levels to watch. Senior markets correspondent Kevin Green's with us to take a look. Good morning, Kevin.
Yeah, I got paid.
Good morning, Nicole. Yeah, we are seeing around 57% of the stocks on the S&P 500 in the green so far. Once again, kind of a mix of the performance. We're looking at the sectors moving to the upside here. Energy is actually outperforming. A little bit of geopolitical risk is being priced in. Information technology and consumer discretionary. Keep your eye on Amazon. It did actually have a pretty decent day yesterday and a lot of accumulation on the call side. So that might be one that could actually push the consumer discretionary stocks to the upside. If you're looking at the level of 7,000, you already talked about it. We did cross that line. That's going to be your first area of resistance for today's session. That first candle, we look at the 15-minute chart, is more of a hanging man candle, a little bit more bearish. Let's see if we're able to actually break through 7,000, move up to around the 7035-ish area. That's where we're seeing the majority of the flows this morning on the call side. If you do see a breakdown, 69.50 is where you want to be able to hold. And volatility, for the most part, is kind of underpricing, or you're showing that the Fed meeting itself is not going to spark a lot of fireworks here. We are seeing a little bit more call side skew. So let's see how the market actually pans out. But you'd like to see kind of this participation taking place, at least for now. You'd like to see a little bit more risk on. Hopefully we're able to also see healthcare kind of catch up there as the insurance things got beat up yesterday.
All right, and what's going on with nat gas after that big gain last week? We have another storm coming this weekend. Your thoughts?
Might be able to get to 8.
Yeah, if you're looking at the nat gas chart, now the front month contract is being reflected is going to be the March contract. So the February contract, it's still trading today, but it is going to expire today. A very low volume. I would not recommend actually getting into that because it's very low liquidity. So you are seeing the chart kind of reverse here a tad bit. This is just because the March contracts pretty much has been trading around this $3.50, $3.65, $3.65 level here for a considerable amount of time. But we're still kind of within this range. You're talking about those weather events. There's a weather storm that might be developing on the East Coast, may not be as aggressive as and let's see how so the chart makes it a little bit more dynamic than what's actually happening on the surface here in cold, just because of the future.
All right, Kevin Green, it's great to see you. Thank you for that. Really important stuff there. Really appreciate it. Our market meetup panel is here. Alex Copy and George Gillis. Great to see you both. Alex, some of your thoughts as we hit 7,000, and we're waiting all these Max 7 names and Fed Day.
Yeah, a lot to explore here. All-time highs, so a good starting place, no doubt. We talked about the earnings so far through about 20%. Basically an average beat rate, about 77.5%. But the price reaction still quite negative about 0.9%. Now, I went and looked, and if you were to kind of take the Magnificent 7 names, particularly Microsoft and Meta, as I think they're the most impactful, and you were to kind of convert what the market's one standard deviation range is expected for those names into S&P 500 points, just those two names alone, if they were to stack in one direction and kind of move to what the market is pricing, you're looking for about a 30 to 35 point potential impact to the S&P 500. So we're talking about half a percentage point or thereabouts just from those two names. So when we came into this week and we had those two names circled, that's why. Just the math behind the size of those companies and the value that they carry, combined with the volatility of the earnings events, they have a real impact. Arguably a bigger impact than the Federal Reserve will have.
That's why you just buy
What do you think here? George Gillis, you're up.
Back up a third, man.
I like what Alex just said. I was just going to mention, I think if you look at, Microsoft and Apple, those are two names that I've been paying close attention to since the end of last week. There had been quite a bit of momentum. Price action in those names have been very positive this week. A little bit of a stall out today. So looking at the heat map right now, and you can see those two names are the downside as they're going to be reporting coming up today and, of course, tomorrow for Apple. So, continuation above the 7,000 is going to be what market participants are going to be looking for. Sort of a breadth thrust above that level. We're teetering on it right now. You can look at the Dow, which is basically slightly the downside, nearly flat right now. So I'm going to pay close attention to these names because they have been pushing the index to these new highs as of the last few trading days. And I think it's, again, as Alex mentioned, I think it's more meaningful than the Fed. The Fed is going to be sort of a dull event in my view. No outlook change. Probabilities of the next rate cut aren't coming until, of course, mid part of this year or June. So, for what it's worth, it's an earnings season market, and that's what we'll be looking for. Also, looking at the usual culprits today, silver is catching another bid. Looking at heating oil is also to the upside. Copper. The dollar is still relatively weak, and then the usual culprits or suspects in the semiconductor stack, Micron. Texas Instruments up nicely today, but Seagate and Western Digital all higher. So we'll see how those names end up closing. If they close in strength, and we do see some positive outlooks in terms of earnings from companies like Microsoft, we could see a continuation back above the 7,000 on a closing basis, not necessarily on an intraday basis.
How worried are we about a lower dollar? I mean, there's still so many guests coming on and being us positive outlooks between now and year end. Alex?
I actually don't think that a lower dollar is concerning if the pace of which it goes lower is relatively controlled and steady. It's really volatility in FX that causes pain. In the case of the dollar, particularly for international countries, developing countries that have trouble getting dollars, a cheaper dollar in many ways actually perpetuates its use. It makes them more attainable, makes that supply easier to get for those countries that struggle to get them to basically, I guess, service the debt that they carry in dollars. So to me, it's actually the opposite of a concern. It's a concern when the dollar starts moving higher and higher at a very rapid pace.
And George, we're going to give you the final word. You know, we have less than a minute left. We're waiting on all these big earnings. Final word?
Yeah, just to add to the dollar, I'm not concerned about the dollar weakness either. I do suggest that we're starting to see some major moves in the international markets. Latin American markets are trading well. The United States is not the only place to be investing, and capital expenditures in the United States on a non-residential basis are extreme. But it needs to filter through the rest of the world, so maybe the dollar weakness is signifying that there's a lot of investment demand in the international marketplace, which is a positive sign.
And I guess it could go up.
And I'm really looking forward to Fed Day today at 2 p.m. Eastern Time. Join me for the watch list. We'll all be sort of commenting as we get the very latest from the Federal Open Market Committee. I'm Nicole Petalides. My thanks to Alex Coffey and George Phillis there. I'll see you later at 2 o'clock. Keep it right here on S&P 7000. Morning Trade Live. Stand by us next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking.
Did you see the picture I sent
plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
What are you doing?
I'm prepared to like, bro.
Nothing. I'm gone. Hey.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, sharp trade ideas, minute by minute. With shows built for action,
5 minute
we
time
break it
frame
all
is
down
chopping,
in
but
real
on the
time.
15 minute, it looks like it's kind of setting up for a decent play. You'll see.
I think one of the most important things is making a play in a risk-defying way here going into earnings. So that would be a further downside area to watch.
Right now, that's my
Actionable data.
It is the best time frame.
It is the best time frame.
Streaming live and on
Oh, okay.
Schwab Network. Streaming 24/7. Any screen. Anywhere. Free. Schwab Network.
Okay. How you in your phone?
Mom said when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire
I don't know if
world.
you're saying
I think they
I
were
don't know if
totally
you mean
met
more
what their wishes were. Schwab has been with us for almost 25 years through purchasing houses, opening up our business, having children. They've always been there for us.
I want to invest with the companies that can help
So
me
let's say
make my
your
family
risk is
happy
25%, but you did a 4R. That means you caught 100% trade. You get what I'm saying? 'Cause
Stay
24
connected to
25
what moves
times
the
4 is
market.
100.
Download the
You know
Schwab
what I'm saying?
Network app and
But a
stream
4X
anytime
is a
wherever you are.
400% trade. Which is, yeah, you know what? Yeah, which is
No, I'm about to send it to him.
much more than a 4R.
What you said?
He said he sent it to you because he don't like how you talking to me. He says it is. And I don't know what it is.
That's the first time he ever gonna see him get traded, bro, in all these years.
No.
Because he ain't never had an actual trade he actually won. First time.
Why is he saying that?
Happy Hump Day, everybody. Welcome to Morning Trade Live. I'm Sam Vardas, live from the floor of the New York Stock Exchange. A busy day here. We've got plenty to hit on both here and abroad over the next hour. So here is a look at what is coming up on today's show. We have you covered when it comes to the Fed and today's big earnings. We'll preview what to expect from the FOMC decision and Jerome Powell's press conference. And over the next hour, we'll have example trades for both Microsoft and Meta ahead of their earnings reports for both mega cap tech names. Let's take a look at where markets are trading half an hour into the session here, because it's been a very busy morning, of course. It's Fed Day. We've got these Max 7 members that are set to report. We have hit 7,000 on the S&P 500 for the first time ever before retreating here. We're at 6,994 right now on the benchmark, up 0.2%. The Nasdaq is up 0.7% as we see this positioning ahead of what are going to be some key report cards out later. We've got 6 on the Max 7 in the green right now. The Dow Jones continues to remain underwater. Just today on the line to the downside. Obviously, that was our underperformer in the segment yesterday. We've got the Russell 2000. A little bit of a quiet performance there right now for the small cap line to the upside, but we'll take it. So a bit mixed across the major averages this morning as we get up and running for a midday for your money. Let's take a look at foreign markets where things stand right now. Weakness out in Europe today. We are approaching the final hour of trading here. The DAX down around 0.5%. The FTSE 100 down 4
Calm down.
In Asia, we have the Nikkei 225 managing to clutch onto some gains there. A lot of attention on the yen, which has been strengthening, and the Hang Index closing up 2.6% off the back of course of some of these headlines regarding China approving the first batch of these NVIDIA H200 chips to start that program. Let's take a look at futures products, obviously with this big decision coming out later today, which is pretty well baked into these markets at this stage, but it's all about what the Fed's going to say later on. We've got the 10-year yield pretty steady there, or it's just ticked up a bit today. We're at 425 as the benchmark. We've got the US dollar index, the Dixie, which has been stabilizing, but still hovering around these 4-year lows. Remembering the biggest drop yesterday since April, but it's okay. President Trump says we're doing great, things are all right. He's comfortable where things are at right now. Obviously good for exports, not so good for some of that imported inflation, but it's a tricky balancing act. We'll continue to monitor that. Gold hits at 5,300 this morning. We are holding above that level right now. We're up 4% on the precious metal. We'll talk to KG about that in a minute as far as what we're seeing in the precious metal space across the commodities as well. We've got crude oil at $63 a barrel, up 1.3% right now. Of course, a lot of headlines regarding Trump and Iran this morning. We'll dig into that. And Bitcoin, we're at 89,000 and change right now on the cryptocurrency. We're up fractionally 0.3%. So as I mentioned, a very busy day here. We are chewing on a lot of earnings. Obviously, a lot of gains we're seeing across the chip space this morning, across memory as well, off the back of a number of these reports. We've got Seagate up 15%. But let's just talk about where these markets stand. Of course, around half an hour into trading, bring in Kevin Green, who joins me now to get across his takeaways in the first 30 minutes here at KG on what is going to be a very consequential day with a lot of catalysts with the FOMC and, of course, these Max 7 members. What are you seeing as far as the performance this morning and volatility expectations come later this afternoon?
Yeah, I think the performance, at least so far, you do have information technology kind of, it was leading the way. It's up about 0.5% at this point in time. Consumer discretionary up about 0.9%. You are seeing a bid in Tesla as well as Amazon. You talk about the strength of the Mag 7 names as well. This is going to be the 6th day in a row, maybe, that they are going to be green for this week, or pretty much for this run that we've seen. And I think that's really kind of emblematic of the fact that we are seeing a little bit more of a rotation out of this broad market type of allocation back into technology, consumer discretionary, as well as communication services, those heavier weighted sectors in the S&P 500, which could also drive gains higher. And that's because of the preparation for earnings. We will have earnings today and tomorrow from some headline names. If they're able to beat these expectations, that could once again kind of push the S&P 500 above that 7,000 level, keep us above that 7,000 level. Our fabulous producer also actually mentioned that President Trump just posted that America is back because they hit this 7,000 level for the S&P 500. So you see a lot of enthusiasm here. Let's see if we're going to be able to hold. I'm still cautiously optimistic. If you're looking at the volatility structure, we do have equities up. We also have volatility up. Now we have event risk here today. We have to be mindful of here today. but we do have some skew to the upside or some call side skew. So everybody's kind of on the bullish trade here. If we get some comments from Chairman Powell that's a little bit more negative, then we could see an unwinding of that and maybe a rapid reaction to the downside. I'm not sure if we're going to get there, but that's something to keep on the radar.
Big Mama.
Of course, so a lot of comments from Trump this morning regarding the dollar and, of course, what we're seeing as far as the equities are concerned as well. I'm just seeing also, looks like the Treasury Secretary is likely to speak very soon as well. So perhaps we'll get some comments maybe about currency and then also where the markets are at. Just wondering, as far as this chip rally that I mentioned, a lot of attention on the memory space today off the back of what we got from Seagate, off the back of what we got from SK Hynix overnight, smashing records, and then ASML as well, seeing that strong demand coming from some of these names. Just talk us through the price action this morning because it was an interesting move, you've got to say, off of Seagate's initial reaction, which was down off the back of these numbers. I couldn't really see the hiccup or the disappointment, but we are back up today 15% higher. Talk us through how you're thinking about this.
I think the market is kind of structured for a bullish move when it comes to Seagate. If you look at the options flow yesterday, a lot of call buying activity taking place in the out-of-the-money options, especially around that 420 level. So I think this is actually a little bit more of a gamma squeeze scenario for Seagate, which is why we are seeing kind of this rapid price reaction to the upside. If you look at a lot of these companies that have reported, especially in the memory space, they are seeing the demand being reflected within their numbers, not only in the current quarters, but their guidance moving forward. And it's not even just 1 quarter or 2 quarters looking out. They're looking at a longer-term time frame out to 2027, 2028. They do believe that demand is going to remain actually fairly resilient, and their margins are also expanding. I think the biggest thing for Seagate is the concern that maybe margins will contract for the next quarter, but they have to spend money in order to kind of basically scale up their business to meet demand, and I think that's probably why you are seeing this reaction. A lot of these names have been kind of left for dead 2 years, 3 years ago. Now they're having this catch-up trade, and a lot of them were aggressively shorted. It's not so much the overall short interest, it's the fact that we had some concentration with certain institutions that were shorting a lot of these trades. They're probably getting blown out as well. So good earnings. If we continue to see this follow through over the next couple of weeks, I think that's going to be a tailwind for the market. I don't know how the market's going to react, though, Sam. If Meta and Microsoft and a lot of these hyperscalers continue to ramp up their CapEx spend in order to build out these data centers, I'm not sure if that's going to be a net positive or a net negative for them. It's still going to be a positive for these memory names and companies like NVIDIA, AMD, but I'm not sure if it's going to really be a positive thing for the hyperscalers that have already spent a significant amount of money to build up
the lowest tolerance to drill.
And that's what we certainly saw last earnings quarter. I mean, particularly was the case with Meta, which sold off after earnings. There seems to be some concerns here in the street about how they are spending, if they do have that spending discipline that certainly the others have across the other hyperscalers. Let's just park that there at the minute because obviously it's been a nice day, as we mentioned, for some of the chip names. We're also seeing some China headlines with NVIDIA, but we are monitoring what is taking place with crude this morning off the back of some more commentary coming out from Trump regarding Iran. Just talk us through the headlines there and what sort of impact we're seeing as far as the price action of commodities this morning.
We are seeing crude oil breaking the 200-day moving average. If you're looking at a daily chart, that's going to be a key area of resistance. The last time we were there was back in July. We lasted above that level for about 3 sessions, 4 sessions, and then did see a failure here. But we are seeing a price advance because of this geopolitical risk, and then also because of this winter event that has taken place over the last week. We will see some disruptions when it comes to oil supplies, and that could also have an impact when it comes to inventory numbers that are going to be reported by the EIA over the next couple of weeks. So you are seeing some bidders really trying to step in. Crude is really trying to hinge and try to break out higher here. I'm not sure if that's going to take place, but if you're looking at the options positioning on the futures market, there's definitely more of a bullish skew over the next 3 weeks to 4 weeks for crude to the upside. In fact, even getting to potentially at 70 levels, that's where a lot of the interest is actually reflected here over the next 3 weeks, 4 weeks or so, which is about a $5 move, $6 move from where we're at right now. Give or take a look at the blend between Brent and WTI. So there's actually a pretty decent from the action. Just be mindful if you move up too far too fast. President Trump has been kind of chewing on that and tried to dampen down oil prices. So this is definitely a supply story, not a demand story. And there's also this notion that we might be trying to set up a potential blockade for Iranian crude oil tankers as well. That has not been confirmed. If that is going to be the case, then that would actually push the price.
You sure? You're gonna feel some pain? I said I don't care.
Okay, and then across the metal space, another day, another record for gold, climbing above the 5,300 this morning. We've got silver back in action as well, ripping almost 9% at the stage. I'm seeing up 115 right now. Copper, platinum, palladium, all up. Palladium's up at 8% right now.
I had like
what's driving that this morning?
Fibers on into my Achilles still attached.
Yeah, I think it's still speculative trading that's taking place within the gold and the silver space. I mean, obviously we have seen the weakness of the dollar, the comments yesterday, the dollar is now kind of breaking to the downside here. At least for now, we might see a little reaction back higher.
Let's let it heal back.
It is a little bit
surgery. You have complications
at this point in time.
Skin irritation.
It has a safe haven asset. If we could actually bring this up real time, I would actually appreciate it. Either pull up the silver chart or pull up the dollar. We are seeing actually a very sharp reaction from both of them at this point. So maybe there's some comments coming from Besson or maybe some comments coming from President Trump that's creating the sharp reaction. Actually, silver just dropped about $4.
It can, it can as long as you have at least a strain. If you have a strain of that your Achilles still attached,
contracts
yes, it can heal.
are trading in an unusual fashion. And you can lose money really quickly. You can make money really quickly here. But it is getting out of the when we're looking at the depth of market and liquidity levels.
So now it's completely attached.
We're just seeing Secretary Besson speaking to CNBC right now. Some of the lines coming through saying they're absolutely not intervening in the currency markets. So this is obviously something to keep an eye on. Says the stock record stock run. We put in good policies for growth. So they're just some of the lines we're seeing so far. So we'll continue to monitor that as they, of course, will be continuing to interview Besson there over the next course of a few minutes. All right, we'll be keeping an eye on some of those developments. Thanks so much for all that, KG. Moving on and coming up, we'll take a look at the bigger picture from the team over at Charles Schwab. Morning Trade Live is back after this.
Well, we just think we need to have surgery because these professional athletes be having surgeries after they test and shit. Them niggas gotta get back into the shit within a couple months.
Yeah, exactly.
We got years we can rehabilitate.
Exactly. I was like, hell nah.
We not professional athletes.
I'm a professional trader, and I sit in front of a computer all day. I don't sit here and let this joint heal. I do my little workouts. I do my little workouts at home, and then I go to physical therapy. It hurts, but it's way better because at first I couldn't even stand up on it. Then I could stand up on it. But then when I was standing up on it, I used to have my leg out to the side because I couldn't bend my foot. Now I can bend my foot and stand straight up. So I'm making progress. You know what I'm saying? It's just, you know, you gotta go through. You can make progress. I make quick progress.
Fast progress, huh?
Yeah, because I tore it October 28th. Yeah, so November, December, January. So exactly 3 months ago from now. Today's the 28th. So 3 months ago from today, I tore it.
You wear a brace?
Walking around the house, no.
I'm Nicole Pedalides at the New York
It's just
Stock
that, like I said,
Exchange.
it's sore
Live
and my range
interviews,
of motion
market
isn't all
movers,
the way
and
back there
real-time
yet.
coverage
So I
right
have
from the
just
floor.
a little
Subscribe
bit.
now
You know what I'm
at
saying? But I'm walking regular, but when I leave the house, I have a boot that I wear. You know what I'm saying?
Okay.
Intern. This place is incredible.
It's where I get all your office supplies.
You know what I'm saying?
Your
And
golf
that's
balls,
it.
your fancy coffee,
Your giant TV.
it's everything in one place.
Go back to
Like,
Uber again.
Schwab.
Yeah.
Everything investors need.
Come again?
Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
I was ranked number 8 in the state.
Invest your way
Top 3,
with Schwab.
top 300 in the
No
nation.
politics, no spin,
High school.
just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. The memory stock rally is in full effect this morning. Seagate hitting another new all-time high after reporting a top and bottom line earnings beat, while issuing strong profit guidance. Western Digital, SanDisk, and Micron all moving higher as well this morning. and sympathy. Also with respect to what we're hearing from SK Hynix and ASML, all looking good for the memory space right now as they are all moving in tandem across the supply chain. So here's our leadership board right now. Seagate flying high off the back of these earnings, up 16% right now. Texas Instruments has also joined the party today off the back of its earnings report, up 7%. We had F5 Networks out with a report card yesterday as well, so we're seeing a nice rally in shares with that name. And Intel is flying high today, up 8.5% as we stand. So it's a very nice chip and tech AI theme that's rallying this morning, helping us drive things higher, of course, crossing 7,000 for the first time on the S&P 500 and helping doing some of the heavy lifting on the NASDAQ as well. Here's some of the losers on the session. Amphenol down at 13.5% or so. Westron down 7.5%. Albemarle in the business of lithium down 6.8%. And Xylem down 5% in trade right now. So those are some of the losers on the session thus far. Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. We've got Nathan Peterson, Director of Derivatives Analysis, Schwab International Research, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Nate, we've got to start with you. What a busy day. Obviously with the FOMC, we kind of know what they're going to do. Very earnings-driven day. We've had Trump out this morning saying America is back. We've crossed 7K. We've got Beckett making some comments right now about this currency intervention. We've seen a sharp move in the dollar. We've seen a sharp move in the metal space as well, particularly that pullback in silver. What's catching your attention this morning?
Yeah, good morning, Sam. Again, if you look at the divergence between, say, the NASDAQ and the Russell,
you can
see basically over the past 5 trading days or so, there was a bit of an unwind. The Russell had run up and it got to a pretty hot RSI, and over the past 5 days, now we're seeing that money rotate back into tech. That makes sense because we've got mega cap tech that's coming up on deck. And, you were just talking about ASML and Seagate that reported numbers there. I mean, look at the bookings that ASML delivered. I mean, it was almost double estimates. Go back to TSMC that reported last week, and the read-through in terms of demand that's going on this AI infrastructure bill. And then, you got the S&P at all-time highs. You got GDP clipping 4 to 5%. This is primarily driven by the largest infrastructure build-out in history. It's all the capex and investment that it's going through, and you're getting all of these data points that are suggesting, if you listen to the executive commentary from a lot of these, whether it's the memory makers, whether it's the semiconductor equipment makers, like we're going to hear from Lam Research today, but like ASML, they're calling this a multi-year build-out.
This is ugly.
It's funny, we're going to have the Fed today, and there's not a lot of expectations there. We may get 1, maybe 2 cuts this year, but Sam, as long as we are doing this type of growth and this type of demand, because AI, of course, AI is just not focused or it's not centered around the tech sector. It goes out into industrials, a lot of blue-collar workers, etc. And that just has this kind of trickle down throughout the economy, which is really good for growth. And if we don't get any cuts this year, I don't think that's going to matter as long as there's this kind of strength that's in the backdrop. Now, underneath the surface, you're going to have to be very selective where you are within tech. We're going to hear from ServiceNow later today. Software, many of those big, large cap names that are very popular. Wix, Workday, ServiceNow, etc., Salesforce, they've all been hitting 52-week lows while the market's hitting new highs. So let's see what ServiceNow says. That's going to be an interesting data point as well. And then, of course, in regard to mega cap tech, CapEx is going to be interesting. We probably don't want it, our investors probably don't want it to be too hot, and they probably don't want it to be too cold. So that's going to be an interesting read-through. I'm not sure exactly how markets are going to respond to those CapEx numbers when they come out.
And then I'm going to trade that for them.
Yeah, well, I mean, the Meta response was a bit of a surprise at last time around. So let's see. Hey, Mike, let's just switch gears to you. We've got some comments coming out from Bessent regarding, of course, the next Fed chair, saying he doesn't make recommendations, he just gives options. They have 4 great candidates now lined up. They've been talking about this on the plane back from Iowa. Just talk us through, how you're thinking about what we're likely to get from the FOMC today, and then obviously looking into the future, because I think obviously the decision seems to be pretty well priced in at this stage. It's just a bit of a wild card as to what we're going to get with respect to any of those announcements. I mean, who might be the next Fed chair and how they're thinking about the future path
ain't mad at it.
Yes, Sam, great to see you. What an interesting Fed day. I mean, we haven't had a day when Fed monetary policy decision was quite as much of feels like a non-event as it is today. Obviously, the overwhelming market expectations that the Fed will hold steady. I am going to keep my eye on how many dissents there are. Of course, there were 3 last time. And we do have 4 new FOMC voters. 4 regional Fed presidents from Cleveland, Dallas, Minneapolis, and Philadelphia who are rotating on here at the beginning of the year and will be voters this year. So maybe we'll get some signals on where they are. But somehow that's kind of the least interesting thing going on at the Fed because, as you said, we've got this ongoing drama around who Trump might pick as the next chair. And everyone's talking about how they got 4 great candidates. There's also this sense in Washington that has been growing over the last few weeks that the president isn't super happy with any of them. And there's this kind of buzz underneath the surface about, is there a dark horse 5th candidate? Is that candidate Scott Bessent, the Treasury Secretary, who's running the search and, of course, has said many times that he does not want the job? But maybe Trump could persuade him. So I think this is really a fascinating situation. You look at the prediction markets, nobody is at 50% right now. So there's a real divide as to who this will be. And I think there's a lot of interest, obviously, in who the choice will be. The other factor that the president has to keep in mind is the Senate confirmation process for whoever he chooses, because relations between the White House and the Senate have not been that great over the last couple of weeks, and certainly in the wake of the Minneapolis situation. So I think that's part of the dynamic too. That's why Rick Reeder from BlackRock has sort of moved towards the top of the list. I think partly because they think he is probably the most confirmable by the Senate. So a lot of intrigue going on around this. It'll be fascinating to see if we get a decision this week.
Yeah, absolutely. We'll be watching, particularly given, as you say, some of the timing involved in that. Nate, let's just get back to you. Obviously, the Mac 7 is going to be the next big test for all these markets post that FOMC meeting. What does the technical setup tell you right now? What are you seeing under the surface?
That's how y'all puts?
Well, a lot of divergence within technology. It used to be, Sam, that tech is one cohort. Investors love growth. They love the Mac 7 or the Mag 8 or the Grade 8, whatever you want to call them. And then about middle of last year, all the CapEx spend. It used to be, these huge stalwarts have these ecosystems. They have this fortress balance sheet. They have this cash flow. That cash flow is now going to CapEx. And that's what's really created some of this, discernment within the tech space. And so even within the Mac 7, we've seen Apple lagging and, Microsoft lagging as well, software related-ish. Then you've seen Alphabet being, kind of crowned, kind of one of the winners of AI, etc. So on the technicals, it's going to depend on which company that you're looking at. And I think there's just a lot of question marks in terms of, what AI impact is going to be on software or those types of companies with regards to CapEx. We haven't quite seen exactly that the bottom line type of translation in terms of the spin just yet. That remains a question mark. There's not going to be, everybody's not going to win. There's going to be a lot of competition. A lot of these large language models can be commoditized. So if you're getting this increased competition into this space, even when we're talking about the Mac 7, this is kind of encroaching on those moats, those ecosystems that they have. So these are all questions that the market has right now, and that's why we've seen volatility underneath the surface between each individual company. So we're still kind of feeling it play out, Sam, in terms of just what is an appropriate amount of spend, and then when we start to really see some of that show up on the bottom line in terms of productivity, margins, etc., without competition being too much of a threat.
Yeah, we'll be watching big day, as we mentioned. Plenty of headlines to keep an eye on, particularly this afternoon. Thanks so much, gentlemen, for joining me today. Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. Mike Townsend, Managing Director, Legislative and Regulatory Affairs over at Charles Schwab. Coming up, more on the impending rate cut announcement, or Fed rate announcement, I should say. Not so much a cut, perhaps. And Jerome Powell's press conference. How much volatility will we see this afternoon? That's the big question. That and more when Morning Trade Live returns.
I'm Diane King Hall. On the floor of the New York Stock Exchange. When markets react,
Yeah, but
we
you
are
still
live
crying
with
about that
analysis
shit?
that matters.
crying. I
Watch
don't know what
now,
y'all
only on SchwabNetwork.com.
You okay, mama? Calm down.
I'm not even sure what y'all was saying, bro. I just walked
How's it
around
going?
and shit.
First day, so
Sometimes, you know,
Next.
You okay, bro?
you could have done better.
please.
Same goes for where you invest.
Gold is almost up 200%.
Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
We're back on Morning Trade Live. Starbucks is moving higher this morning after a mixed earnings report, missing on adjusted earnings but beating on revenue. Global same-store sales were up 4% in the quarter, and CEO Brian Nichols said that the company believes its turnaround is ahead of schedule.
It's at 99 now.
Joining us now is David Bush, Co-Chief Investment Officer at Trajan Wealth. Thanks so much, David, for joining us this morning. It's really nice to see you here. So obviously a very busy day, plenty of headlines driving the tape, particularly this afternoon with the FOMC and the Mag 7. What are you expecting from everything?
I've been telling you, any pullback.
Yeah, so today I would expect the Federal Reserve to pause, the FOMC to pause any further rate cuts. They will pause for today, but they may also signal a pause in further rate cuts. If we look at the economy as a whole, yes, we have positive economic growth. Labor markets are softening, but the unemployment rate is still relatively low. We're just waiting on that last mile of inflation to get back to the Fed's 2% target. So a pause and wait and see is probably the likely outcome of today's meeting.
And then the Mag 7, I mean, obviously that's going to be the next big test for these markets. I mean, a pretty high bar on what we've heard from some of these memory folks. What are you expecting?
Yeah, so today we have 3 earning announcements coming from Microsoft, Meta, and Tesla, and they're all part of the Mag 7 and part of that concentration in the S&P 500. So how earnings releases are received by investors and what they signal is going to drive market returns. And so we could see some headline risk this afternoon once those earnings are released.
Yeah, absolutely. So what are you watching, as far as some of the opportunities in the market right now? The start of 2026 was one of rotation. The theme was very much broadening out and diversification. But now we've seen that rotation back into perhaps arguably what had been working last year with some of the leadership back in the driver's seat. Where are you looking in this market right now as far as, allocating the portfolio?
Yeah, so I'm looking at more of a barbell approach. So I still want to be invested in large cap tech because AI is the wave of the future, and there's going to be that build out and that monetization of the AI. Ultimately, though, we barbell that with some value tilted dividend payers, and specifically those industries that should benefit from the AI infrastructure build out over the next couple of years. Also, if we look into the Russell 2000s, we look down to that small and mid cap, they're going to be beneficiaries of easier monetary policy, but also the onshoring or reshoring of manufacturing into the U.S. and will also participate as suppliers for some of these industrials and that AI infrastructure build out.
Yeah.
With these Mag 7 names, I mean, obviously not just the mega cap tech, but even outside of that, they've been very much benefiting from the hope that, obviously AI is going to be a game changer for our lives. It's all going to be about productivity. It's all going to be about efficiency gains. But do you think that's being a little bit too well priced in at this stage as to, the benefit that's going to have, as far as how we carry out our days at this stage when, all the talk seems to be about application, but we're just not there yet? Or do you think it's been sufficiently baked in?
Hopefully, I hope it drops.
So valuations are higher, and so there is excitement about the benefit that AI can bring to the U.S. economy. What I would say is that we have to wait and see if these companies are going to be able to monetize the AI, first and foremost, and then secondly is how industries across the economy are going to adopt AI and what efficiencies they'll gain from it. So right now, I would say that's why we're barbelling is because we want to stay invested in that large cap growth, that large cap tech, but also balance it out with some value tilted dividend payers to help dampen some of the portfolio volatility.
Yeah, absolutely. A little bit of diversification hedging in this market. We've got to leave it there, David. Really busy day here. Really appreciate your insights. David Bush there, Co-Chief Investment Officer at Trajan Wealth. Coming up, it's time for the Morning Trade, and we'll take a closer look at Microsoft ahead of today's earnings. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back to Morning Trade Live. Let's focus on this afternoon's mega-cap tech earnings. Here's where Microsoft, Meta, and Tesla are trading this morning ahead of their quarterly reports after the close. We've got Microsoft on the line, very much waiting for some direction here. Meta is up 0.3% and Tesla is up 0.8% right now. So a bit of a mixed picture as we await this report cards. But Microsoft is the focus for us this morning on Morning Trade. So joining us for a closer look at this name is Marley Caden. Obviously, Marley, you and I were going to be breaking down these numbers as and when we get them this afternoon. But talk us through the setup. I mean, how have analysts been feeling about this name going into earnings? I know over the last previous couple of seasons, it has been the favorite going into the Mag 7 report cards. Is it different this time? What are the expectations?
It is a little bit different this time, I think, Sam. Still bullish, still favorable, but hearing a lot of people saying that they think Amazon and Meta might be the two names to watch in this particular reporting period. But Microsoft expected to do very well. They also have a history of doing very well. You asked for the setup. Coming in, they've exceeded revenue estimates every single quarter for the past 2 years by roughly 2% on the average. So the bar is high. This quarter, looking for revenue to grow about 15% year over year to $80.23 billion. That would be an acceleration from the increase that they saw in the same quarter last year, which was 12.3%. Earnings expected to come in at $3.88 a share. Now, one of the things I keep seeing in the notes that the street's definitely focused on is that Microsoft can show it can control costs as it builds out data centers to meet AI demand and to support its Azure cloud unit. The stock did drop in October after the company upped its spending guidance. The CFO saying at the time that CapEx growth in 26 would mark an increase from 25 after previously saying that that growth would slow. Analysts expecting CapEx to rise to $99 billion for the fiscal year that ends in June for Microsoft, then jump again over the next 2 years Consensus for fiscal second quarter capex and finance leases is roughly about $36.25 billion. So that would be up 60% year over year. That's that number they're looking for today. As far as margins, which we've seen be very important, back in October, they called for it to be flat year over year. Analysts are foreseeing the narrowest operating margin in 3 years for Microsoft at 67%. And Microsoft ended its exclusive agreement with OpenAI about a year ago, and since then, they've been diversifying away. They've announced their strategic partnership with Anthropic back in November. That included a $5 billion investment in the Claude maker. Anthropic committed to buying $30 billion of Azure compute capacity. But that big play remains in cloud infrastructure for Microsoft. The last earnings report, they were calling for 37% growth in revenue for Azure and other cloud services. That was slightly down from 39% in the previous quarter. Analysts at Evercore ISI did put out a report last week, though, saying that after attending Microsoft's event in New York, they do see that Azure continues to enjoy what they call a healthy competitive position, but that does remain a big and very important number. All eyes on that cloud services number as well as that CapEx spend.
Yeah, and you just wonder how much the street is willing to accept, at least tolerate this time around, given we had some questions and given all these names have come off so much, obviously, since the last earnings season. So let's wait and see. We're trading a bit lower right now. I'll catch you later on, Marley, to break down some of these numbers after the bell with you. Let's trade it now with Charles Moon, stock strategist at Prosper Trading Academy. Very good morning to you, Charles. As I mentioned, it's been a tough couple of months for some of these names, obviously coming off since the last earnings round. But obviously, we've recouped some of those losses just in the last couple of weeks as we position ahead of these report cards. What's your example trade? What's the approach for Microsoft this morning?
It's a fairly aggressive one, short-dated upside call diagonal here. Microsoft's rejecting at the 200 SMA, but they're projected to do about a $23 move on earnings, so if they have a positive result, that could push them above $500, which could actually lead to a breakout as high as 520, 526. So, with these new options that are being developed or that was created for these stocks, I'm looking to sell next Monday's February 2nd 500 call, and then buy the February 6th 490 call. Pay a debit of 450 or lower. If it does have a positive result, this thing is going to shoot up through 500. I would say around 510 is going to be a tricky level for them to really kind of push beyond, but because of the suppression in price since their last earnings, there's some really good upside value, and the market could play catch up. We could easily see Microsoft jump as high as 526. Now, a lot of this is going to be dependent on their cloud services. If you paid attention to cloud names at the start of the year, talk about a bearish start. This is not typical for the industry or the sector, and Microsoft obviously was actually rolling, and just lately it looked like it's been coming back over the last 4 days, jumping sharply off 440. So this is pretty critical. Those cloud numbers are going to be pretty critical, but if they come in a little bit higher than expected, especially in terms of revenue and revenue expectations going forward, this is where we could see Microsoft kind of surprise Wall Street here.
Okay, looking for that cloud and that capex for this name come this afternoon. Just your overall thoughts on the market this morning. Obviously, hitting 7K for the first time ever on the S&P 500. We've come off that a bit now, but Trump's pretty impressed by that. We've seen the dollar stabilizing this morning on some of Besant's comments around intervention. It's chips ahoy this morning. Obviously, we're seeing a solid run now for the memory stocks off the back of what we've heard from some of these companies. What stands out to you?
It was ASML's results, and that certainly lifted the sector. TXN was another one that's really performed pretty poorly on their last two earnings report and helping lift the markets. And of course, the news that came out of China that they approved the first shipments of the H200 GPUs from NVIDIA. The thing is, the NASDAQ, the Qs made new all-time highs, S&P hitting 7,000. We're doing this in the face of a bit of uncertainty. We're not sure exactly what Jerome Powell and the gang is going to guide in terms of future rate cuts. I believe the dot plot is only suggesting one as is. We're certainly doing this with Trump also saber rattling about Iran. We still have to wait for the SCOTUS opinion on tariffs, and then at the end of the week, the potential government shutdown. So the market has been very resilient. It's kind of in this wait and see moment. Yes, we're making new highs, but it looks like investors, traders, they're looking to take profits pretty early. They just don't really trust the markets, and everything just kind of remains in a short-term fashion. And I think until we see things settle or get a little bit more clarity, we're just gonna slowly inch up and pull back, slowly inch up and pull back, at least for now.
Yeah, a lot of balls up in the air. Got to see where some of these land, but as you say, a pretty resilient market as we stand. Big day, obviously, with the FOMC and these Mag 7 members, so appreciate your time today, Charles. That is Charles Soon, stock strategist, Prosper Trading Academy, joining us there. Coming up, we'll take a closer look at the sectors on the move this morning and what you need to know from international markets. Morning Trade Live. We'll be right back.
Beyond Meat.
Well, I'm in a bad company, though. Bad.
What about Beyond Meat, though?
Oh, gosh.
Beyond Meat.
You been telling you what you need to trade, bro?
It's bad.
Beyond the Meat.
Get you a stop loss like trade. Play with $40 a day. Start off with $40 a day, bro. $40. Trade. You win that. Save that shit. Play with another $40 the next day.
Hey,
play with no more than $40. Nah, bro, you shouldn't be playing with no more than $40, bro. I'm gonna have to tell you like this, bro. You dead ass broke. You gotta play with your money, bro.
Why you talking to me like that? Hey, yo, Cole. But why you talking to me like I don't got all these assistants and like I ain't the coldest and shit?
Let them know.
Man, no, somebody gotta let them know for me, because I don't even know who you talking to like that. I'm trying to do analysis on
Morning
Beyond Meat.
movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers. Grab your cup of coffee and tune in every trading day at 8 a.m. Eastern, only on Stop Now. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Stops are options. You gonna say that on
Live from Chicago, this is Trading 360. I'm Marley Gaden. We track macro market trends and companies that shape investor decisions, all with expert analysis and actionable context, from inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Yeah, I know,
Welcome back to Morning Trade Live. I'm Sam Bardas, coming to you live from the floor of the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning as we've hit 7K on the S&P 500. So let's get to Alex Coffey now to talk us through what's happening beneath the surface here, because there's a little bit of a different story as far as sort of the push and pull going on here. We're looking pretty mixed beneath the surface. Just talk us through that this morning, Alex.
Yeah, good morning, Sam. Of course, new milestone checked off today with the S&P 500 index crossing 7,000 for the first time. So we don't have to worry about that anymore as the march to 8,000 and beyond begins. Of course, slightly under that mark now, but all things considered, I think your setup is right. S&P 500 is about 45-55 in terms of percentage breakdowns of up versus down. Only about 45% of names are higher, pretty close to 50-50 for much of the session. As we work towards unchanged, though, as we come off those highs around 7,000, we now only have 3 sectors that are higher and really only 2 that are comfortably higher on the session. That's energy, which has been the stalwart outperforming sector of the year so far, and then IT, which is, in my opinion, the most important sector when you start thinking about the names that make up that sector. Semiconductor names certainly leading today, up 1.82% when you look at the SOX. But all that to be said, Sam, I think this is the calm before the potential storm. Now, that storm doesn't need to be a move to the downside, but I mean volatility. You got the Fed announcement later on this afternoon. You got Meta, Microsoft, Tesla earnings after the close, and of course you got Apple after the close tomorrow. There's just a lot left on the calendar for this week that will ultimately determine the movement. I don't see a lot of incentive for traders to be loading up the boat right now when there's still so much more information that we're going to get so soon.
Yeah, well, they're certainly loading up the chip boat, as you say. The SOX is up, the SMH is up. We're seeing a nice rally there. Just talk to us about some of the Mag 7 members, particularly those who are likely to report, obviously, going to report later. Individual stories sort of moving and shaking some of these names today. Obviously, we've heard around Amazon laying off 16,000 jobs. We've heard about the NVIDIA China chip story as well with the H200s. But talk us through some of the price action that stands out to you today.
Yeah, I mean, NVIDIA stands out as it often does. It's contributing about 7 points of upside to the S&P 500. And so when you look at the S&P 500 right now, that's up 5.5 points. It's basically the entire gain and then some. Tesla's the only other name that's green here in real time. But none of the moves, with the exception of NVIDIA, are greater than 1%. So at the moment, I would say it's a lot of waiting and seeing what happens next. But for some context, Meta and Microsoft, those two names alone, if they were to move in the same direction, sort of what the market is anticipating in terms of a 1 standard deviation move, you can expect about a 0.5% move in the S&P 500 in that direction. Now, that's a lot of ifs, but that's just kind of converting what the expected volatility of those names is into an S&P 500 impact, just to illustrate how important those earnings will be.
Yeah, it's going to be a big one this afternoon. We'll be watching. Alex, really appreciate the insights. Thanks so much for getting us across some of those moves in the market today. Moving on, turning our attention now to international movers. It's all about chips, as we've been talking about. Europe's most valuable company, ASML, jumping after earnings. The Dutch equipment chip maker exceeding expectations on a number of metrics there. It reported a record $15.8 billion in orders for Q4, smashing estimates while lifting its 2026 outlook. The company says it's planning 1,700 job cuts, which is about 4% of the workforce, mostly in the Netherlands. It also announced a 12 billion euro share buyback plan. The stock is up over 35% in 2026, on track for its biggest monthly increase in more than 20 years. So, where is that demand coming from? Well, memory chip makers like SK Hynix shares in South Korean tech giant popping overnight after setting records with its full-year profit for 2025. The company more than doubled its operating profit, and on these tighter supplies and higher prices, it also reported record revenue and profits for the quarter as well. Revenue rose roughly 66%, while profits jumped nearly 140%. The company has secured 2/3 of NVIDIA's HBM4 orders. And speaking of that name, China has reportedly approved the first batch of the H200 AI chips. ByteDance, Alibaba, and Tencent have now been given the green light to buy more than 400,000 of these chips. And there are said to be other companies lining up now to get the nod as well. The Hang Seng Index rallying over 2.5% overnight on that news. Coming up, it's time for Inside Out. We'll take a closer look at Meta ahead of these earnings and bring you an example trade for this name when Morning Trade Live returns.
Hey, investors, you know the market moves. Schwab is here to help you with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
That's all we take one day trade during the day.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
They don't pay us though.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning.
He got till April, yeah.
Tune in live or
He got a
on
couple
demand.
more meetings.
Head over to
Then all the meetings after that
schwab.com/coach
gonna be
and
Bears.
start learning today.
Every meeting after that gonna be Bears, bro. I'm telling y'all niggas, that new Fed chair, they ain't gonna fuck with that nigga.
That nigga's about to retire. That's crazy.
Yeah. Get a new Fed chair this year.
Real-time
That
access,
shit gonna be Bears.
data-driven
I wonder who that is. I
analysis,
wonder who
U.S.
that's gonna be.
equities to global macro matters. Schwab Network connects the dots. Watch live.
I can't go
Subscribe
to
free at
BlackRock.
schwabnetwork.com.
The CIO of the former CIO of BlackRock. They're supposed to be the new
Trade Live. We'll get a closer look at the Max 7 starting this afternoon when Meta, Microsoft, and Tesla all report quarterly earnings. Tesla and Microsoft have made modest gains over the last 12 months. Meta has been the laggard, though, on the group, just below the flat line for the year. So let's go inside out on Meta ahead of earnings. Joining us now is Melissa Otto, head of Visible Alpha Research, S&P Global Market Intelligence, joining me around the desk this morning.
2013,
Melissa.
2014.
Hi, Sam. It's so nice to see you. It's nice to see you. Meta. Let's start with CapEx,
No, that is
because we
what
saw
now?
somewhat of a market indigestion last time
That
around.
shit was ringing.
Is it going to be any better this time? I mean, what have they got to say?
I mean, we're excited to hear what they have to say. I mean, right now, Visible Alpha consensus is looking for $110 billion for this next fiscal year. It's a significant year-over-year increase. So how they guide the market in terms of their CapEx will be really important in terms of how investors think about the free cash flow and valuations for the stock.
Yeah, it's about obviously how investors think about that spending discipline, which obviously they think that the Googles, the Microsofts, and even the Amazons of the world are doing a better job at that. Also, some of the more sort of AI partnerships, the more advanced, I suppose, partnerships that it's got and tie-ups that the others have as well. What's different between then and now with Meta? I mean, what's been the story over the last 3 months as to, how it's sort of set up? Because obviously we've seen across the Mag 7 coming off a bit as far as stock performance is concerned, but we've heard a lot of updates from Meta, obviously on the nuclear, reallocating some of that capital from areas of the business that aren't working into areas that are working, or they hope that will work.
Indeed.
So what are you hearing there?
So I think there's a couple avenues here with Meta. The AI investment for them is very much about them tailoring more and more of the content into your Facebook feed, your Instagrams, the reels that are seen. All of that is becoming more and more bespoke to the individual user. And the AI is ultimately one of the critical dimensions for that. The other piece of this is that tailoring, in theory, is going to make it much more lucrative from an advertiser standpoint. Now, how long until the rubber hits the road? When we look at what the market is expecting for next quarter, market's expecting 47% operating profit margin for the family of apps business, which is about a 500 basis point year over year on the quarter decline compared to what we were seeing last year. And I think the market may say, hey, what's going on here? You're seeing an uptick in OPEX, we're seeing an uptick in CapEx. When are we going to start to see meaningful earnings growth and operating profit margin expansion that reflects all this investment in AI?
Yeah, that's right. It's the ROI, isn't it? And then obviously you've got a situation with Meta where you have the Microsofts and the Google of the world that have the cloud revenue, but then Meta relies a lot on the advertising side of the business, as you say. So when you talk about the guidance and you talk about the costs, and I know you have exclamation marks on all of these things in your notes, what is it that they actually have to say?
What do they have to say? They have to be able to demonstrate and walk the investment community through how all of this investment is ultimately going to grow the business.
Yeah.
And make the business more profitable so that shareholders are rewarded. Right now, it feels like we're in a bit of a holding pattern in terms of where the actual trajectory of Meta shares potentially may or may not go.
Right, yeah. So we want to see the payoff, certainly in the guidance and, what they're saying around some of the commentary as well. Melissa, always appreciate your insights. Thank you so much for stopping by here at the New York Stock Exchange with us today.
Stay warm.
Yes, we are trying. That is Melissa Otto there, head of Visible Alpha Research, S&P Global Market Intelligence. I appreciate your time. Let's trade it now with Tom White, host of Fast Market. Meta, Tom, give us an example trade for this name ahead of these earnings.
Yeah, expectations. The bar's actually low in this one. Stock's relatively flat over the last year. Remember, last quarter, this stock pulled back 11% on upping the bottom end of their CapEx spend to $70 to $72 billion, and that was from the previous $68 billion. So that right there, has investors a little bit probably more fearful than we've seen over the last couple of years going into earnings on this one. So I looked at a strategy that's risk defined. Of course, we're going into earnings. Anything can happen. The option market's pricing in about a plus or minus 6.5% move either way in the shares. So I went out to the January 30th weekly options that expire just this Friday. So this is an earnings type example trade here, where I'm going to sell a neutral to bullish put vertical here. I'm going to sell the 650 put. It's out of the money to the downside, and then buy the 630 strike put. So a short $20 wide, neutral to bullish put vertical. I'm going to collect roughly about a $5.5 credit for it. The credit you collect is what you can make on it. So $550 per spread with $1,450 in risk on that, but that's all the way below the 630 level on this. If I collect that $550 credit, takes my break even down to 644.50. That's over 4% below the current share price. So a little bit more aggressive and still within that one standard deviation move, but this might be the more prudent way to play it if you're bullish, just due to the fact that, hey, anything can happen. And even if the stock does pull back and you're wrong and remains above that break even of 644.50, you're still going to be profitable on this one. So you've got a little bit more risk to make a little bit less, but at the same time, you got a probability of that 650 strike will be out of the money at expiration of about 65%. So the higher probability offsets some of the concerns about the amount of risk versus the amount of potential profit you can have on this type of neutral to bullish short put vertical.
All right, as you say, a bit of a low bar heading into this one, given the performance we've seen. But as Melissa Otto just pointed out, the payoff, the capex, the guidance, the costs, all in focus this afternoon. Tom White, really appreciate it. Thanks so much. And of course, we are pairing gains here across the major averages as we did hit 7K on the S&P 500 earlier today. A very, very big day for your money with the FOMC decision and some of these Mag 7 members set to report later after the close. Thanks for joining us here on Morning Trade Live. I'm Sam Bartas. Download the Schwab Network app, available in the Apple App Store. We've got Trading 360 up next with Marley.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network.
Come on, FOMC, hurry up, bro. This is boring.
Expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world, I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I need. My contract still wouldn't even be up. 25%. Not even up 25%. That's why I'm not even mad at their first trade loss.
We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. Company Innova's new CEO will join us to discuss how they've gained almost 100% from the April lows. We'll walk through their latest quarter and its latest acquisition and how it will boost growth in our 360 spotlight. And Mag 7 earnings will be in focus after the close today. George Tillis will be with us to bring us a preview and an example trade of Microsoft in our disruptor. And finally, our 360 round will highlight Starbucks hitting a 10-month high after its earnings. We'll break down all the numbers next coming up later in the show. But before we get to all of that, let's take a look at how the markets are faring this morning. We do have a new record on the S&P. Here we are at 69.79. We did touch above 7,000 earlier in the trading day, but now just marginally above the unchanged line. The NASDAQ 4/10 higher, 26,040. On the Dow, unchanged at 48,998. And the Russell 2000 26.56, down about 1/3%. We're just looking for direction in advance of this FOMC decision and these Mag 7 earnings. The 10-year at 4.26. We are slightly higher today. The dollar 96.25. Gold 53.15, up more than 3.5%. That's another all-time high there for gold. Crude oil 62.94. We're trading up almost 9/10 higher. And Bitcoin 89,460, still hovering below that 90,000 mark as it has been all week. I do want to bring in Alex Coffey, though, our first guest, to talk about a big mover we are seeing post earnings. I'm, of course, talking about Seagate here. We're seeing shares. They were more than 16% higher last I looked after they reported their earnings after the close.
Yeah, new all-time high. You were just talking about the NASDAQ outperformance. A big part of that is semiconductors leading today, and Seagate a big part of that story today as well. The earnings really, really strong. We broke these yesterday at the close, if you recall, but there was a little bit of a delayed response, and part of that was guidance is going to be such a big part of the story. This stock has performed with the expectation that the numbers are strong. Can it continue and can it improve? Well, I think we got some information on that suggests yes. EPS 311, way better than last year's 203, way better than the estimate. 22% year-over-year revenue growth to $2.83 billion. That beat the estimate as well. Better margins, better free cash flow year-over-year as well. So growing sales, taking more from those sales, and being able to put a little bit more into the cash pile as well. The guidance was really strong too. You look at the estimate for their EPS midpoint about $3. Well, they provided a low end of $3.20 for the full year, or for the third quarter rather, and $3.40 on the high end. As far as revenue, 2.8 to 3. The estimate for the midpoint was sub 2.8 at $2.78 billion. So current quarter guidance better than expected, numbers way better than expected, and performance perhaps even better than expected, as well as the stock continues to make new highs.
Yeah, as we were covering it, it was very interesting to watch some of the seesawing that we were seeing as they were trying to digest the numbers and figure out, in this case, I guess, if good was good enough or great was good enough, I guess, in this particular case. The market's rewarding it today. As far as any analyst action that we've seen or upgrades, price target adjustments in the wake of the report, have we heard anything?
Yeah, tons have weighed in. Cities were really the only big change I've seen in terms of price targets, but I got a lot of comments. They go from 385 to 460 buy rating. A lot of analysts are already bullish this stock. You see the performance, you see how the fundamentals have shaped up. But for example, Wedbush's Matt Bryson says that they're making steady improvements with revenue and margin gains expected to continue into the foreseeable future. Vital Knowledge, the numbers are terrific. Eric Woodring over at Morgan Stanley continue to be amazed by the strength of this HDD cycle. So do I, to be honest with you.
It's really impressive. It was all the question going into Seagate was, can it hold up? Could they possibly continue this same level of growth? And it appears that they can.
Yeah.
So, Alex, thanks for being with us. Alex Coffey, our senior equities contributor here on the network, breaking down Seagate for us. I do want to bring in our next guest, Jim Urio, joining us this morning to talk about this record-breaking day on the S&P, also Fed Day, Mag 7 earnings, and so much more for us to get to. Jim, also managing director at TJM Institutional Services. Great to see you. Thoughts on what we're seeing this morning, that record, but seemingly also looking for some direction in the markets today?
No question. And I think part of that is because we're looking at so many really, really key earnings releases in the next couple of weeks. I think it's hard to dig your heels in and make the case to yourself, to the market, that we should be pushing way beyond all-time highs. The fact that we went there, I think it's good. I'm still relatively bullish for the first quarter. The only thing that scares me a little bit is that there is still some stretched pricing, although we've seen kind of a rotation out of big tech or the NASDAQ into the Russell over the last couple months, and it's done so relatively seamlessly. So I'm encouraged, but I don't think we're completely out of the woods yet.
All right, so let's go back about a week to when we really felt like we were in the woods. The day of the geopolitical set-off surrounding Greenland, and you are arguing that the narrative blamed a lot of it on Greenland, but you see it tied to something very different, and you have a well-supported thesis, so I'd love for you to walk our viewers through it.
Thank you. So at the time, this was Tuesday, the 20th of last week, when the Dow was down about 800 points. At the same time those things were happening, Japanese 40-year yields went, exploded higher. I think it was a signal that Japan's been defying gravity and having 240% debt to GDP ratios for decades. Everybody thinks there's going to be a reckoning at some point in time, yet it never comes. But all of a sudden on that day, it seemed like it could. Yields doing what they have in Japan are huge. The yen being down 35% in 4 years' time against the dollar. The dollar, which is basically down against every other developed currency, is a huge deal. So even, and both of the central banks of each country must have thought it was a big deal because they are sending out the rumor that they might be supporting the yen. But anyway, the point is that if Japan has some sort of cataclysmic bond event, they own $1.2 trillion of U.S. treasuries. If they're forced to sell those at any point in time, that could be detrimental to our economy. Also, the yen carry trade has pushed a lot of people to buy yen and buy U.S. dollar-denominated assets, which are tech stocks as well. So if people are exiting that trade as well, that could be a serious thing.
All right, so a couple follow-ups here in this hypothetical. If it were to happen that Japan had to start liquidating some treasuries, where would we see a breakage first? What would fall apart? Would it be bonds? Would it be equities, currency markets?
I think it would be bonds first, but that would just be a very narrow lead over equities. I think equities could feel the heat as well. You know what's funny about this one is that every time I look at it, because the Tuesday I was talking about, the stocks got hit. In normal situation, you'd see people buying U.S. Treasuries in that sort of disrupted market. They weren't. They were selling U.S. Treasuries, which lends a little bit of credence to my thesis. So if that happens, I believe that equity markets will get hit. The one thing that every time I spin the wheel and say, what am I supposed to buy? It comes out in the same two assets. And I hate to even say this because we've said it so much over the last couple of years, but gold and silver. And that's also one of the reasons that they're exploding higher today. I think they're saying that we have fiscal deficit problems, but I think what they're really saying is out there could be a black swan event lurking.
Stocks
And by the way,
with
I'm not
frost.
saying that Japan is going to implode. I'm just saying we have to have it on the list of possibilities on that side of the whiteboard.
All right, I want to stay in this hypothetical because it is important to sort of play it out. I'm very much like you. I like to know the possibilities and what might happen. So before we talk about gold and silver, because gold another all-time high this morning, I want to talk about the yen carry trade. You estimate close to about $1 trillion tied up into this trade. If it starts to unwind, how much U.S. tech ownership could be exposed here, Jim?
So I'm not exactly sure. It's a little bit opaque as to how many of the big tech stocks they own, but it seems reasonable that it's a significant amount because we've known about it for years that they've been borrowing yen, buying dollars, and then buying U.S. dollar-denominated assets, including treasuries. So the answer to your question is, I don't know. But I will say this as well too. I'm not sure the actual net amount matters. If the world believes that it's substantial, then all of a sudden selling begets selling and people start to head to the exits just in anticipation.
Look at it. It's just nasty. Up, down.
Also add this too. This is about the fifth time in 2.5 years that everyone says, okay, the yen carry trade's about to unwind, and then it doesn't. Again, this has been amazing to me how Japan's been able to defy the odds and keep going, even though so many different things are lined up against them from an economic and fiscal standpoint.
Think about it like this,
All right, now I want to move to where everybody's going in case this happens. If Treasury is losing some of their safe haven appeal, we've certainly seen it go into gold, and silver also sort of alongside of it, but slightly separate here. In terms of gold and silver, we've got gold at north of 5,300 for the first time ever today. We were about 5,300 right when I opened the show. Silver has recovered from its losses yesterday. We're back up to 113, plus 113, which is a record there as well. Are you still bullish, even with this meteoric rise we've seen and this rush into these safe havens?
The answer to that is unquestionably yes. Now, that being said, I've been up to my eyeballs in this trade for several years. So over the last 2-3 weeks, I've gotten out about 25 or 30% of my silver and gold, meaning I still have 70% left on, and I plan on keeping on because I am still quite bullish. Now, the silver gives you an extra element to gold. Gold is the pure play on what we're talking about. Silver is like the next-gen AI play as well, too, because there's the electrification narrative, the fact that we're running at structural deficits of silver. And again, so back in May, that's why we at unfilteredinvestor.com switched our focus from gold to silver, thinking that was going to be the big catch-up play and going to be the recipient of that tailwind. It was. But gold's the purer play, and yes, I'm still bullish gold. What I tell people, which I don't tell people, I don't know what your risk tolerance is or how deep your pockets are. What I tell people, though, if it was my job to rush into gold, probably not at this point in time right now, but to have a small allocation and to be adding to that at any point in time, I think is prudent.
All right, so a little bit of profit taking here, but still extremely bullish on both of the precious metals. Jim, at what point does the metals trade, if ever, get too crowded to be safe?
So that you just hit on something that's really interesting because everybody talks about how the fundamentals aren't changing, but market positioning does. So I don't think we're at a spot yet where I'm that worried about market positioning and everything, and all of a sudden things turning and everyone crawling over each other for the exits. But it could come relatively soon. So that's why I think you do have to be. It's not just that you're supposed to grab as much gold and silver as you can and hope for the best, because that could end in tears. So I do think it's volatile trade, and we've seen in silver, anything that goes up parabolically can oftentimes go down parabolically too. Does that mean it's going back down to 50? I think that is, to me, that seems out of the question, and I would be buying it with both hands in the low 90s. But to think there could be some volatility, I think is very, very reasonable.
All right, Jim, we're very tight on time here, but it is Fed Day, so I do want to ask in terms of expectation to market reaction, not so much from the actual decision itself, likely to remain unchanged, but the press conference afterwards. What are you expecting?
So there's no question that they're not moving. I think the Fed, if they look at the market on Fed Day and they know the market says there's no chance they're moving, they wouldn't even if they wanted to for fear of disrupting the markets. But what I am interested in is them talking about their balance sheet, which has been increasing lately because they've been buying short-term bonds. To me, this is kind of an under-the-radar easing. Well, not just to me, to everybody, it is an under-the-radar easing. And if they talk about accelerating that program of buying bonds, that's just as dovish as a cut in my mind.
Jim, great conversation. As always, such a pleasure talking to you. Jim Urio, Managing Director, TJM Institutional Services. And we've got plenty more for you today on Trading 360. Stay with us. Next, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals, and Don Kaufman will walk us through his trades for the iShares Bitcoin ETF, Netflix, and Goldman Sachs. That's next on Trading 360 on Schwab Network.
always saying that too, bro.
Ain't nobody ain't talking to you, big head ass nigga.
What was you talking about again?
I was talking about this basketball game, bruh.
What happened, bro? Who's gonna win, bro?
It's a one-on-one game.
Hey, what do you think about Netflix, bro? It might be a good week, bro. What you think about Netflix? Dang, what's wrong? Look at the market. Just bring it back, man. Gotta be careful. Market gonna bring it back.
This rejection is not good.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She's got your smile, Carl. Yep, your number one broker's here to welcome your new
See,
independent. Actually, we invest with Schwab.
if I was still trading and not waiting for FOMC, I would definitely take some
I've been learning
puts
about
right
trading
here.
strategies. Schwab helps me generate retirement income.
100%.
Has everything you need. It's
Take
making
some
me
puts
cranky.
here, so.
Somebody need a nap?
Huh?
Invest your way with
I
Schwab.
would.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades is Don Kaufman, the co-founder of Theo Trade. Great to have you both with us this morning. Don, I love having you with us on big market days. And today is arguably a very big day. We've got the Fed decision coming up. We've got Meta's earnings. We had some mixed earnings this morning. We're seeing a nice move in the NASDAQ higher thanks to Seagate and some of these chip and memory names moving higher for us. What are your thoughts?
Well, the first thing I would say is I'm already past the Fed. I mean, the Fed is not that consequential. Even if they say something in the statement that's, wild and woolly that we're not expecting, not that consequential. We have $10 trillion of market cap releasing earnings in the next 48 hours. That's where my focus happens to be because in the end, how many billions and hundreds of billions of dollars of market cap are going to be shifted around specifically off of, Meta or Tesla or Microsoft or, obviously some of the numbers coming out tomorrow are equally as impressive in terms of magnitude to this marketplace. And that's everything right now.
It's certainly it's going to be a big day and a fun day, hopefully, regardless of which direction it goes in, at least on my end, as I get to cover it all. But as we take a look at your big 3 picks, I want to talk about your first one, the iShares Bitcoin ETF. Bitcoin prices really stuck in this 90,000, just sub 90,000 area. Can't seem to get through there. Why are you taking a look at the ETF?
Yeah, I'm looking at this ETF as a bearish stance right now, and it's predominantly because we're not moving. I mean, look, we've been told over the last couple of years, come on, crypto, Bitcoin specifically, it's the digital gold. Except gold right now is gold. And, one of the most ironic twists to this, if you look at Tether, which most people are familiar with Tether, the Tether is buying more gold than most central banks right now. Nevertheless, it's not helping Bitcoin at all. And again, I am
When FOMC, I told you I would take puts here, cuz.
So I'm going to take a longer duration.
But like I said, it's FOMC day. It could do anything. It could reverse here and bounce, but my strategy says puts.
To want to step up and buy Bitcoin, we're watching silver and gold every day hit new highs. It's just parabolic moves in there, and crypto is basically left in the dust. I'm going all the way out, though, to the May 15th expiration. I want to be known that this is a duration position. That is, it's a stance that, Bitcoin is not necessarily selling off tomorrow, but there's going to be some turbulence along the way. So the May 15th expiration, I'm going to be buying the 45 puts, selling the 40 puts, just a $5 wide put spread, which is sizable in a product like this, done for a $1 debit.
All right, Rick, so as we take a look here at the iShares Bitcoin ETF, knowing the price action in Bitcoin and what it has been of late, what's the technical setup showing us for this longer-term play here?
Yeah, I've never liked the whole digital gold thing. I always kind of almost want to say, well, would you rather have digital food or real food? You know what I mean? They don't really, translate the same way. Bitcoin for volatility especially. And when we look at IBIT, we can see our chart here trending downward for the most part off of those highs that we saw near 71.82. And we can see that what we'd want to be looking at is our third chart in the grid that shows a downward sloping trend line and then a gradual rising, an upward sloping trend line that has become a channel type shape here, which we are within the boundaries. For now, the upside target, the closest one's 52 and then 53.50. Those are roughly the points of our highs that we saw after our gap down and the low point that was established before that gap in question. Meanwhile, the recent range, 49.25, that stands out as a potential breakdown point on the road to the more significant low that we reached in late November at about 46.75. So moving on to our next chart, we can see that our moving averages are trending downward here. The faster ones continue to outpace the slower ones here. A brief turnaround of our dark blue 5-day EMA above its slower counterparts has reversed, and now we're kind of just moving sideways once again here. But there's a bit of a confluence of 51 or so. That's where two of our shorter term moving averages line up with each other roughly. We can also see RSI, our green trend line that was moving upward, has been broken. Look for things to be moving more toward the downside now. Finally, our volume profile shows that the volume areas in question, 59 stands out a bit to the upside there, and then we also see 54 and 50. So those are the notable areas to watch out for.
All right, so those notable areas we are seeing, though, despite Bitcoin being down on the year, they have managed to geek out a 2% gain on the year. Not a lot, but better than the Bitcoin performance overall. Next one here is Netflix, tied up in this ongoing saga with Warner Brothers Discovery. Arguably had some good earnings recently, but moved to the downside a bit as there's just a lot of uncertainty tied to Netflix right now and how much they're going to potentially spend on this acquisition. You know, walk us through this one, Don.
You know, in this case, I'm actually less concerned now. I've kind of moved past the Warner Brothers acquisition. It's just that. It's a saga. It's drama at this point. It's going to happen. But wait, no, the Department of Justice may actually step in. So the marketplace, look, they just need to put a number to this. Whether the deal is going to happen, not going to happen, just put a number to it, and then we've moved past it. I think this is much more, though, about content and spend. It's enormous out there, but again, I think that's largely priced in. The sell side activity in over here, you need another word for oversold. I'm actually taking a bullish position. Yes, I am a contrarian through and through. I'm taking a bullish position, and this is much more of a near-term bullish position. The stock looks incredibly oversold at these levels and should have a nice bounce, is what I'm actually trading for. I'm going out to the February 20th options expiration. Again, February expiration. I'm just going to buy the 87 calls and sell the 90 calls. It's a $3 wide call spread. It's very slightly out of the money. This one's done for a 95-cent debit. So it's risk 95 cents for some upside of just over $2 in here. Again, it's decent risk reward looking for that bounce. And the bounce doesn't exactly have to be huge. It just has to be there inside about the next month trade.
All right, Rick, so as we look at the technicals, do you see the possibility for a bounce here in the next month?
Well, you know, anything's possible, as we say here. It is an interesting position in which we find ourselves right now because we are near some very notable lows. When we look at our chart, we can see that the lows from the tariff news shock event in April come in right around, 82, 83, that point. We did make some intraday lows below that point recently after earnings, but not really a huge breakdown below that point or anything. So now that stands out as a key supportive area that the bulls have managed to hang on to. Now, some points to watch to the upside would be perhaps 93, 100, 104. Those are some standout levels where price repeatedly stopped and started during our trading year here. When we do look at our RSI study in our next chart, we can see that we have once again entered the oversold area here. That threshold is 30. We can see that that suggests a swift move to the downside. The momentum is more geared in that direction right now, typically regarded as a sign of further weakness to come in the market. However, we are pretty verge of
Nah,
re-entering
I don't care what he does with the market. I
moving
want to
averages
take
here
another
and
trade. I didn't
reestablishing
take this
some of
trade I
these
just told
old
you about
lows.
because, like I
So
said
we'll
on
have to see if we
FOMC,
do
bro, I
get that
typically
crossover out
only
of
take
that,
one
that
trade
oversold area. That
before
would then be a
FOMC, and then I
bullish
wait.
signal to watch out for.
So I already took my one trade, so now I'm waiting for
85, 50 and about
FOMC. I'm just
89,
ready
those
for
are
it to
our
start up. You
closest
feel
to
me?
moving averages that you could be looking for potential resistance
Okay.
at. Finally, if we
What I
advance to
told you,
our
I
final
would have
chart,
gotten in it.
volume
Well,
profile study
I was gonna
chart
say it's
here,
up 50%,
we
but
can
it
see
really
that
isn't.
some of our
Premiums are actually
notable
kind of moving, not that.
volume nodes
Let me see
include
how much
the
it dropped, and I
110
can tell
area
you.
to the upside, but that's pretty far beyond where current price activity is. More important areas would be more
Yeah, nah,
around
it only
90
moved
and
like
then perhaps
68 cents.
93 to
So
97 or so. That's the
it's
standout
only up
heavy
like what,
trading areas
maybe
that the
like
bulls would want to
35%.
recapture to try and reassert some
From that
kind of
low right
upward
there,
trend here.
that low
Notice
to
heavy volume spikes during
the
recent days
retest
as well,
of
especially recently after earnings, Marley.
696.15.
All right, and
It's
another
only up
one
like
that we
30,
had some
35% at the
volatility
low.
after earnings here was Goldman Sachs. Now, they were one of the ones that wasn't met quite as punishingly as some of the other banks were, despite some strong reports here.
Could you
But
still in
year
your
to date,
keys?
up almost 6% here as we take a look at Goldman. Don, what's your thought here?
No, my first thought is, Rick, if you didn't like that last one, you're really not going to like this one. This one is going to be
Forex
a
good.
bearish call. It's going to be a bearish call because the expectations inside of Goldman Sachs right
4R
now
then?
are just, they're unfathomable.
I said a
They're just
4R?
unfathomable expectations over here. Everything from, the deal flow that they're going to be seeing in this next quarter, return on equity, valuations, it's wild in here. And I'm not looking at anything like PE ratio, but, at some point, there has got to be some underlying fundamentals to a product. And I think Goldman has literally exceeded all of this. With expectations this high, for me, the only place is down. With that, I'm going to take a bearish trade. I'm going to go out to the March 20th expiration. Again, in Goldman Sachs, the March 20th expiration, I'm going to be buying the 890 puts, buying the 890 puts, selling the 880 puts. So it's an out of the money put spread. Looking for a decent sized down move in here. It's done for a $2.90 debit. Again, with expectations this high, there's times where you kind of feel where everything is priced just beautifully in there. And there's just no room, if you will, for improvement to the upside. That into itself can actually be a viable bearish position.
All right, Rick, I love when Don says, if you don't like that last one, you're definitely not going to like this one. Do you see any room to the upside? Is Don right that you're not going to like this one?
Well, it's not a matter of liking or disliking. I really appreciate all different kinds of trade ideas here. Really, it depends on your duration and outlook. I mean, if you have a long-term bullish outlook, but you can expect a short-term bearish move and make a trade based on that. That being said, I do think I would probably agree more with Don in this case, to be honest with you, based on some of the technical things that I see in this chart. We had a rising wedge type shape here, which is typically regarded as more of a bearish type of setup. We had recent highs. We've broken below the pattern. We are hanging on to the old supportive area of the former resistance that is now supportive near about 918 or so. So that was our old high. That's around where we're making a low point now. Beyond that, the next notable low, probably around 868 and then 840, 840 being that old high from late November. But to the upside, obviously, 984.70 is the mark to beat. If we were to move to our next chart, then what we see is a picture of slowing momentum. We see that the price activity is having a breakdown that corresponds with the RSI. We can see the RSI has broken below its green trend line. It remains above that 50 midline, but we are trending down where we saw some bearish divergence heading into these highs as well. Not necessarily meaning a collapse is coming or anything. I don't mean to sound that way, but what we see though is when you're at these highs, you're kind of grinding out less and less of a high watermark each time here. The momentum's slowing. The moving averages are on the verge of overtaking each other with the faster crossing below the slower. Right now, they're coming together roughly around 930 for our 5 and 21-day EMAs. Next chart we look at, the volume profile point of control all the way down near 782, but other notable nodes, other heavy trading areas come in at 900 and about 950 or so, 940, 950. So those would be areas that stand out from a trading activity perspective here. So those could be points to be on the lookout for potential support if we do start to get that downward move that this example trade might be looking for.
All right, and right now, in the last 12 months, we're up about 45% for Goldman Sachs right now, trading at 930. 4033. I want to thank you both for being with us today for the Big Three. Don Kaufman, the co-founder of Theo Trade, and Rick Ducat, our lead market technician here on Schwab Network. Coming up, we are going to spotlight Enova, the company's new CEO, who just took over at the beginning of the year, will be joining us to talk about their recent results and a recent acquisition. Stay with us.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Oh. Yeah, what you said right there.
She's got your smile, Carl. Yep, your number one broker
say?
here to welcome you to
So
the
whatever he
index.
said,
Actually,
Mark
we
felt
invest with
that
Schwab.
shit.
They have everything
I
we
told
need.
you, nigga. I told you it was good to go up here. I said that.
Learning about trading strategies.
I told you what I said, nigga. If I took more than one day trade for FOMC, I would have took that, bro.
Somebody need a nap?
He's talking about another goal. Shut that down, load.
Invest your way with Schwab.
Yeah. You know what's crazy? During that first government shutdown, bro, market
I'm Marley Kate, live
market
in our Chicago headquarters. It's time to spotlight Enova. Joining us now, Steve Cunningham, the CEO at Enova. Steve, thank you so much for being with us this morning. Now, you just took over at the helm at the beginning of this year. Company doing very, very well. So I guess my first question to you is, what is the first thing you want investors to understand about Enova now under your leadership?
Y'all know how long I'm here?
Thanks for having me, Marley. It's nice to see you here, and good morning. So we've been working on this transition for quite a while, and I think our investors are very aware of what to expect with the change, and that is really not a lot. We've been very successful with our strategy of balanced growth for a very long time, and so I think what investors should expect, and what I've told them, is like, we don't have a need for hard lefts or hard rights on our strategy, but you should expect us to continue to innovate and adapt and continue to meet the customers where they want to be served.
And let's talk about some of the success that you've had of late. As I was looking through your earnings report for the fourth quarter, doing very well. Originations up 32%, EBITDA more than 20%. You're seeing a lot of growth and strength here. Revenue margins expanded to 60%. You know, walk us through some of the key highlights here and what you're most proud of in the report.
Yeah, so we have a long track record of consistency at Enova. Our team has done an amazing job leveraging our
I told you, cuz don't try to focus on this too much, bro, before FOMC.
And our very strong discipline on unit economics to make really great decisions. We're also very nimble.
FOMC, bro, market kind of, if it's gonna go down, bro, it's gonna trickle down. It ain't gonna just be no straight
traditional
move.
banks.
And as you can see, like, just look at the market on a smaller time frame. You can see market really not moving
so we can move fairly quickly when
Like we
we're
only
seeing
down
opportunities
how
to
much
risk
since the
to
beginning of the day,
maintain
bro?
this
We are only down what?
performance.
A dollar 40.
2025 was an exceptional year.
You know
Q4
what I'm
sort of
saying? Like
capped
not much at all.
the year for us. It's the second year in a row that we've had 30+% adjusted EPS growth.
2%. Like not
I'm
much
really
at all.
proud of what the team's been able to accomplish in our strong performance of serving customers, really better than anyone else in our
Market
space.
just don't chop to
And
the
credit
downside.
has held
bro.
up well across your portfolio here. What are you seeing in terms of customer behavior trends?
Well, they can go.
Yeah, our demand has been really strong. You mentioned that our originations growth as we ended the year was really, really strong, and capped a full year of strong originations, which is driven by that demand from both consumers and small businesses across the country. And our credit has held up very well also. We ended the year with really good credit. And if you take a step back, I think it's really a reflection of where we are in the overall operating environment. I think 2025 actually closed out on pretty solid footing. If you look at the labor markets and real wage growth, and you look at the sentiment of small businesses in terms of how they're thinking about 2026, it feels like we're in a pretty good spot to continue this momentum.
And I saw your acquisition for Grasshopper Bank as well here for $368 million. Why is this such a pivotal move for Enova?
Yeah, so we've been thinking about a bank charter for some time. This wasn't something whimsical, and we were very focused on finding the right partner. And with Grasshopper, we think we found the perfect partner. So a couple things: that the national bank is going to allow us to consolidate a lot of what we do under that unified national charter, which will simplify our operations. It's going to allow us to reach more customers across the country, and it's going to allow us to expand our product suite for those customers as well. I mean, combining our sophisticated lending capabilities with Grasshopper's world-class and award-winning deposit gathering capabilities is a real win, and we're really excited about the opportunities that it's going to present to us.
And Steve, you've outlined $220 million in annual net synergies. Where are those gains going to come from?
Yeah, so number one, the opportunities on the revenue side to expand some of the states that today we just don't have an efficient way to serve. So with our near prime consumer product in particular, we're going to be able to enter into some of the larger states that were difficult for us to do on our own. That'll drive an awful lot of synergies for us. The deposit capabilities that I mentioned at Grasshopper, our ability to fund the business with those deposits will lead to some pretty sizable, cost savings on the funding side. And then this is not about cost synergies. We expect that we will continue to invest in the business. A lot of bank-to-bank deals are all about cost synergies. This deal is all about growth and the opportunities that we see over the next few years.
And Steve, we're almost out of time, but I want to ask you one last question. If you had to sum up Enova's story or outlook in one or two sentences for your investors, what would it be?
Yeah, so we're really bullish on the near term, just on our own with what we see with what Enova does today, and we are really excited about the opportunities for innovation with Grasshopper and our transition to becoming a bank holding company and a bank.
Very exciting times. Enova trading 2% higher today. Want to thank you for being with us, Steve, and sharing more about the company. Steve Cunningham, the CEO at Enova. Coming up next, we've got the disruptors. George Tillis will join us to preview Microsoft ahead of its earnings after the close today. We'll find out what we can expect from the report, and he'll also have an example trade for us next on Trading 360.
FOMC, bro. Is this your first
24 hours
FOMC
a
or
day,
something?
7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network.
FOMC don't care, they gonna leave off. FOMC gonna work, hey, it's gonna work.
Whether you're an experienced
FOMC gonna
investor or
definitely
just
move
getting
something.
started, Charles Schwab offers a webcast that's right for you.
And them puts will be almost up 50%, bro.
Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
This nigga still
Best
locked
of
in
all,
on that.
you can ask questions directly to an
Going
education
crazy,
coach.
bro.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning
Hey,
today.
you green, nigga. Everything is dumping.
Because, bro, you don't be, bro.
Nah, I don't.
Or trying to. Everybody want to go.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. We've got a potentially very busy afternoon on our hands. Market's looking for a little bit of direction this morning, though. The S&P now moving into negative after that all-time high. You know, what are some of the things you're keeping an eye on today?
Yeah, in fact, did you blink? Did you see it? Did you see 7,000 on the S&P 500? I mean, we've all been waiting for it. You don't get ahead until you close above that level. But we did cross 7,000, and that's a round number, Jay Woods was saying. But he wants to see more from the tech earnings, which we're waiting on after the bell. We'll get to that in a moment. But that's the big picture. What are the real drivers of this market? And volatility has been very evident here in 2026. And most of our guests definitely say they expect more of it. Right now, the VIX is at 1696. And everybody is running to the safe haven of gold, which has now hit a record once again. I mean, gold is up $200, hit a high of 53.45 a troy ounce. And so it really shows you the big story. We've had other real winners here. I mean, names like Seagate have been leading the S&P 500. Intel, Western Dig, Texas Instruments, SanDisk are among the winners. On the laggard side, what's dragging things down, because now we do have red arrows in the S&P, healthcare and industrials, as well as consumer discretionary and consumer staples as well. So those are some of the sectors that have the down arrows. The Fed
Nice if I could have had that play.
we're not getting some sort of move.
It'd be nice if I could have caught that
They want
play.
to see what Jay Powell may say. And if he really alludes to the fact that they're not ready
Nah,
to cut
not at the
between now
top.
and
When
May,
I told you,
will
I
President
could have
Trump
gotten
then
it when I told you I would have taken it.
reveal who his pick is for the next Fed chair? You know, of course, a lot of people think it could be Rick Reeder or Waller or Warsh, depending on which likelihood you can see. You know, it looks like Warsh is still maybe the leader, but many think it should be Waller because he's already been confirmed by the Senate, and it'd be hard for them to not confirm him to be Fed chair. Marley?
It will be very interesting, especially if you look into the prediction markets at all, how regularly they're changing and what the markets are saying about who they think will be the next Fed head. We'll know mid-year, but today we'll get that decision. You'll, of course, have expanded coverage for us when that comes out in the press conference as well. But after that, we'll have Mag 7 earnings. So let's talk about some of the names. We'll hear from Tesla. You know, what's expected from Tesla? They're interesting because we already know their Q4 sales numbers. So what's the expectation here? What do you think the market's looking for from Tesla?
You know, it's more about the other things. It's not necessarily about deliveries and all that. So we'll hear from Microsoft, Meta, Tesla this afternoon, Apple tomorrow. The Tesla story here is not about cars. It's everybody wants to know more about
I can't even
other
take
things.
that, bro.
Tesla,
FOMC, bro.
robo-taxis, cyber cabs, full self-driving.
Bro, let me make sure
We know
FOMC
that the
is today, bro.
robo-taxis
Make
were
sure
in
you niggas
Austin, and that really brought
finesse me,
some
and I just missed out a
optimism.
trade,
I mean,
man.
someone like Dan Ives came out. Other analysts have come out and been
Make sure
positive on the
FOMC is
idea
today
of
for
that.
sure. Make sure you niggas ain't just
Optimus
finesse
robot.
me
So
out of
these
a
are the
trade.
things that people want to hear more about when it comes to
You feel
Tesla.
me? Good.
The quarterly deliveries haven't been that bad. In fact, they were sort of ramped up, particularly in the third quarter, to beat the EV tax credit expiration.
Nah, it's today.
So in the third
It's
quarter,
today.
the deliveries were 497,000.
It's today.
In the fourth quarter here,
That was
you
a
see the
bigger
deliveries
trade.
of 418,000, which was below estimates and less than the prior year, about 16% less than the prior year, which was around 495,000. But as I said, there was somewhat front loading that happened throughout this year as people was rushing to beat the tax credit. So for earnings after the bell, $24.8 billion for revenue, 45 cents earnings per share. The high on the stock has been $4.98. But the optimism optimism really lies around the other things Tesla. And so it's not really valued as a car company. It's more of a tech company, because if you look at the market cap, it's 1.49 trillion, and that equals 3 times as valuable as the market caps of Toyota Motor, General Motors, and Ford. So it really shows you that's what people are watching. They really are looking for all things Tesla. And SpaceX IPO in 2026. We're waiting on that too.
Yes, lots of excitement around that. Tesla, one of the only Mag 7 names that's actually in positive territory right now. Just Tesla and NVIDIA higher, and looking at the rest, while trading lower. Thank you to Paul for being with us to preview Tesla. We'll, of course, have those earnings on dividends are automatically later today. But now it's time for the disruptors. George Tillis, our senior market correspondent, is here with today's company. Another one reporting earnings that we'll have on Market on Close, talking about Microsoft here. What are the expectations for Microsoft today, George?
According to GHF,
well, I think this will be interesting. I think in the context of the markets, hitting 7,000 earlier today was part and parcel because of what Microsoft and Apple have been doing at least since last Thursday. Both these names have actually picked up quite a bit in terms of price action, and of course being mega caps have pulled the indices higher. But looking at Microsoft, interesting enough, if you look at it in the last year, the stock is actually down about only up about 7.5%, forgive me, but it's been down about 6% over the last 6 months, having peaked going back to October of last year. If you look at the EPS estimates for the business, they're expecting a quite robust number, $3.92, up 21% compared to the same quarter last year where they earned $3.23. And then also sales are expected to be over $80 billion and $80.22 billion, up 15% compared to the $69.3 billion last year. I think the trends, at least in the short term, have been very positive for Microsoft. A few things to note is, if you go back to October's quarter, they denoted as a business that their intelligent cloud computing, which of course includes Azure business, was up 40% year over year. If you look at those sales numbers in that division at $31 billion, it's nearly equivalent to their traditional legacy business, which is of course their productivity and business processing service software business, which generated sales of about $33 billion. But nonetheless, I think one of the things that is perhaps a challenge for Microsoft, and this may explain, amongst various other reasons, why the stock has been an underperformer, is the ownership stake it has in ChatGPT. Some say based on a convertible basis,
save time creating
stake
content
is
and generate a high-quality clone of your
33%
voice with 11
in
Labs.
OpenAI, and I think that's suggestive of why the stock has been underperforming as of the last 6 months, because OpenAI is struggling to meet some of the revenue expectations. So I think the remaining performance obligations of Microsoft going forward and guidance, and perhaps more visibility in terms of their ownership stake in OpenAI, because again, if you look at last quarter, they did take an adjusted loss of $3.1 billion or 41 cents in earnings. So if they do that again this quarter, that might end up being weak area for Microsoft. But if they don't, that could pivot the stock back to the upside.
Certainly could, and I've seen a lot of that similar sentiment in some of the analyst notes I was taking a look at ahead of Microsoft's earnings after the bell today, looking for some ROI or some indication that this CapEx is going to pay off here. But knowing that they're lower on the year so far, they did not have the most impressive 12 months in terms of Mag 7 performance. How do you look at structuring an example trade here, George? Is it a shorter play that factors in earnings, or is this a longer hold?
We're going to do a shorter play here. And so, again, if you look at price action, one of the things, is if you're structuring bullish trades, the stock has to, at the very least, be above the 200-day moving average. What's happened in the last week is Microsoft is nested right below it. So, again, that's a telling sign, perhaps. It could break above it, but it also could fall again to the downside. So I'm going to play both sides. And I'm basically going to structure outside of the market maker move between now and expiration on Friday, which is about $23, a 2-day R in Condor. So it's basically a very narrow base trade. I'm going to structure it about $25 up or down, which is, again, a little bit outside that market maker move. I'm basically going to sell the 505, 510 call spread above the current price and below the current price, 455, 450 put spread. So altogether, this is a $5 wide structure, four-legged. You can earn about $1.75 in credit or $175 in contract. So the whole premise behind the trade is range bound. We want to see the stock stay within the confines of the short strikes, 505 high on the calls, 455 low on the puts. your max gain is $1.75, and if it stays within that range, the premium will erode quickly because it's only a 2-day trade. But you have to consider the risk. It's 3 1/4, and that only occur if the stock breaks out of 510 high or 450 low. So if you look at the probabilities, there's a 60% probability of profits. And I structured this relative to 20 delta options on both the short call and short put up and down. So again, it's a narrow trade. You have to be mindful of that. If it breaks above those long strikes on either direction, it may be a tough one to recapitalize on because you only have 2 days expiration.
All right, right now at 478.95, we'll have those earnings after the bell on market on close today. Thanks, George, for that example trade in our disruptor today. Coming up, we're going to take a closer look at Starbucks earnings. Stay with us.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a major break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
MSG1.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
MSG1.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss Starbucks after its earnings. Phil Kafarakis, CEO of IFMA, the Food Away from Home Association, and Dan Ahrens, Managing Director and Portfolio Manager at Advisor Shares, with us today. Phil, let's start with you. Takeaways from Starbucks this morning and this move we're seeing to the upside.
Yeah, from inside the industry, I can tell you, we're like, yeah, this is what Brian Nichols is supposed to do. He's 16 months into the job, and of course, we're seeing some great reporting from them on same-store traffic and sales. Transactions were very good, bringing people back into the store. So his back to Starbucks strategy seems to be working. Everybody's kind of focused in on their margin and the contraction of the margin, but some of that was explained and is part of what's really happening across the industry when you think about higher commodity costs. He's making big investments that are paying off inside his stores with the improvement of the workforce and longer hours and closing down some stores. So he's basically on track with everything that everybody was talking about with respect to the transformation of Starbucks, particularly during the holiday season when we saw strong holiday sales and consumers out and about.
And Dan, Phil just mentioned there, we saw revenue higher, traffic higher, comps beating expectations here, but margins still under some pressure despite the explanations here. Would you go so far as to call this a turnaround quarter, or is this still a work in progress for Starbucks?
Well, it was nice to see some increased revenue, some increased traffic for the entire restaurant space, if we're including Starbucks in the restaurant space, because it's a tough space. But as an investor, we still don't hold Starbucks in our Advisor Shares Restaurants ETF. It was mentioned about the margins, and they haven't done much to control those expenses yet. Their fourth CEO in the last 5 years is trying to reinvent Starbucks yet again a little bit, trying to make improvements, and again, we're seeing some progress. But I'm not surprised at all by the actual earnings miss on the bottom line. And, the stock popped a little bit before market opened this morning, mostly on the fact they're offering guidance for the first time in well over a year. They had suspended guidance. And once again, they have a lot of hopeful promises about growth and store growth. But a lot of that store growth is based on China, which we've seen this before from Starbucks. and they've had a hard time ramping up there. So a lot of headwinds still, and we're still avoiding it from a pure investment standpoint.
And Phil, we saw transactions grow for the first time in 2 years here from Starbucks. How meaningful is that for the health of the core business as a part of this turnaround plan?
Yeah, I think when you start looking into the core business, it's very positive. When you think about him closing down almost 400 underperforming stores, they do have plans to open more stores, but the margin pressure actually comes from investments that are long-term investments. When you think about the work that they're doing, again, we mentioned workforce, but they're also doing technology. Their loyalty programs brought back people into the stores, particularly during the holidays. They continue to pump out some innovation. When you think about the Barista Cup that they promoted, they are doing their traditional peppermint mocha. They're jumped on the protein foam train. He's doing things that are setting the company up for long-term success. He's got several new executive leaders that come from the restaurant industry that understand what they're doing. Just announced a new chief technology officer. So, from an insider standpoint, I can tell you that they're doing all the right things. The China business just is about to close on a joint venture that will help them alleviate the headwinds and the challenges they had there, going back to opening more stores and getting into second-tier, third-tier cities. So I think they're on the right track. Long-term, they're a force to be reckoned with. Their margins are still good when you think about 10%. Higher end of a 3 to 10% range. So it'll be very interesting to see them continue to play out the transformation and the strategy that Brian Nichols put in place.
And Dan, I want to continue talking about these margins here and what Phil just said about the investments we're seeing into staffing and higher wages and store reinvestment here. How much longer can they really continue this before it needs to translate into notably better earnings for the stock to re-rate and become more appealing to someone like you?
It's hard to say. I'm still in a wait-and-see mode, and there's no doubt that they're doing some things to make improvements long-term for the company, and that's great. I'm only speaking from a pure investor and fund manager standpoint, where am I going to put my dollars into Starbucks right now or put my dollars elsewhere? I'm going to put them elsewhere. I think there's better opportunities than Starbucks right now. I'm in wait-and-see mode. It's hard to say what is the timeline to really see improvements to the bottom line. Maybe in the next 6 months to a year. But besides the improvements that they're making, they still have well-documented supply chain problems that they really need to work out. I think he's making headway. He's putting things in the right direction. I'm just investing in other areas that look more attractive right now.
Well, I want to thank you both for being with us to break down the earnings we got from Starbucks today. Phil Kafarakis, CEO of IFMA, and Dan Aarons, Managing Director and Portfolio Manager at Advisor Shares. That's going to do it for us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app, available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. We'll have Mag 7 earnings for you later on Market on Close, but stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
MSG1. Get inside the minds of pro traders.
My point is that they're getting
a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area.
Spot insights, actionable data, veteran traders, and trusted financial journalists streaming live.
What's up, Frost? What's that do?
Schwab Network, streaming 24/7,
Frost,
any
what's good,
speed,
man?
anywhere,
Feed.
free.
Look at feed.
Last year, my dad had a stroke. Big shock.
No,
To
look
see
at
this person
feed.
that I've
Stop.
always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I grew him mad 20 years ago.
Jim's really been there to answer any
Get the
questions
strap
that I
ready, have
Makes a
Apple
huge
back,
difference
and go to
to someone
Pound
that
Town.
actually cares.
Look at
Stay connected to what moves markets.
Cause I need
Download the Schwab
FOMC to come,
Network
bro.
app
I'm
and stream
mad, bro.
live
That this
coverage
trade was my
wherever
first
you are.
trade, bro.
Which one?
You get me?
You got
Freaking, I
another
told
trade?
this nigga, yeah, I had another setup, but like I said, my rules are on FOMC days, I only take one trade. And if it loses, then I wait to trade FOMC. So today, the first trade I took was an L. I took some puts, I tried to scalp some puts. Oh yeah, you was here. Well, you took it with me. I tried to scalp those, this puts we tried to scalp, ended up losing 20%. And then I told this nigga to read at,
who was that?
You! At 690, at 696 in. And when Spy tested on the 5-minute chart, the 11:15 candle, Spy rejected 696.18, and then at 696.12, I told him, dang, I was like, if today was the FOMC, I would take puts right here.
Been marking a new all-time high
You know
for
what I'm
the
saying? On that
S&P 500
retest
and
of,
Frost.
well, it didn't actually retest 696.18, it got close, but it touched 696.12, which is what I told him I was going to take puts.
Wall Street. So here's your
And then,
scorecard. The S&P 500 off
would
by
have took puts there, price
0.1%.
would have
Now we'll
green,
continue to watch this
25%,
to see
it
if
would
we
have went back, break
reclaim
even, and then it
those
just now, and then it dropped,
levels.
and
The
then
Dow
the puts would be
flat,
almost,
up
would have been
less than a tenth
up
of a
almost
percent.
100
NASDAQ 100
percent
tech
off
is
that
still
drop.
leading the chart to a
And then he
degree,
said, I
but
think we're
we're
about
up
to bounce.
just
I was
about
like,
a quarter
I mean,
percent.
I told him, I said,
Long path taking a
I said,
step
FOMC
back off by
is the
a
day
little
that
bit
the
more
market
than
can do
a third of a
anything. I said,
percent.
but if today
Here's
wasn't
the roadmap
FOMC,
for
this
today's
would be my
show.
second
We'll look
trade
at
of puts right
example
here, and
option
then freaking
strategies
market just
for
drops off
Tesla.
that,
It's got
off
earnings
my
due
the
after
entry
the
spot,
bell.
entry point I would have
Team
taken.
from Lightfolio will be along with new
Now
data
I'm just
on
waiting for
Meta,
FOMC to
and
come.
Microsoft is also on our radar today. We've got some heavy hitters
I'm
coming
just
up.
waiting for
Now that we've
FOMC
got the
since I
roadmap
did get
for
to catch
today's
that
trading
trade.
action, it is
Just
time
wait
to
for
bring in my
FOMC,
co-host.
catch that FOMC,
You've
what
got Tom
FOMC got
White
for
in our
us, bro.
Chicago
FOMC
studio,
has to
and Kevin
start
Hayes joining us
red, bro.
live
Because
from the
I have
Seahawks.
no
You know, we've got coverage
information
from exchange to exchange
above
and beyond. All right, the
696.54,
S&P 500
bro.
hit that
Like,
new
I have
high
no
today,
information above that.
pulling back now. We're
So it
awaiting
has
the
to
latest
drop,
decision and
give me
commentary
a
from the
rejection
Fed
at one of these
on the
levels
path
up here,
for
up here,
rates.
down here,
The
and then
dollar is
bounce off of
stabilizing after Treasury
Got
Secretary
to,
Scott
bro.
Bessent's comments still sitting near
Either that or
four-year
it needs
lows.
to
Tom,
drop
what's your
hard
take on
down,
the
and
process?
then during FOMC,
Yeah,
just
I think
push up,
we're
and
in
then
wait
I'll
and see
take the
mode
rejection off
after
of
hitting
the
those
levels.
record highs for the S&P 500. You
On
know,
the
the
highs,
numbers
man.
are still out there. The data's
Yeah.
supportive of it.
Either way, I'm looking
we
off of,
finally
I'm
seen
looking
a
at a
turnaround in
reversal
that dollar
on some
after
one of the
hitting
other,
nearly
one of the ways.
four-year
You know what I'm
lows, and I
saying?
think that's a telltale
Expect
sign.
that.
I feel like they
You know, because I
everybody
felt like if that
right
dollar
now,
continued to
the
fall,
Yeah, that's
we'd
exactly
start
what
to
it's
see
trying to
some
do.
headwinds. We're seeing
Premiums are
a little bit
even
of
like I
a
said, even
bump
this
in
drop right here, bro.
yields
This drop
also today. So maybe that's pressuring
$1.70
because we got some really good earnings
Typically
reports
on
from
SPY,
some
premiums are
big
just
companies,
moving
especially in
regularly.
the tech side.
A drop
You
like
look at
that,
Seagate,
I mean,
Western Digital,
$1.30,
Texas Instruments up pretty significantly.
$1.30 drop is like
Microchip,
100%.
AT&T.
It just dropped
So your
$1.70%.
earnings are coming in
I mean, it just
the way
dropped
that they should be with
$1.70,
markets
and
sitting at
premiums only
all-time
went up
highs.
what, like
I think once we get
88%.
through some of
You know what I'm
maybe
saying? So
geopolitical
premium, the
risks,
drop,
maybe
premiums
some of the
moved on that
volatility
drop,
that's
but it
getting
didn't. They
added
still
into that
weren't
Fed meeting
good.
this
You know what I'm
afternoon, and
saying?
the commentary
They still
from
didn't.
Fed Chair Powell.
Like it's a
That
regular
might,
day.
you know,
what I'm saying?
appease
Premiums
maybe
are
some
lagging a little
volatility that
bit.
we're seeing. The VIX is up 4% today, and that's
Yeah,
not
you know they
surprising
fucking with the
because
market,
it's
bro.
not only the
Yeah,
Fed
that's why I
meeting,
say
it's all
during
those
FOMC,
earnings
that's
that
why
we're
I
going
only
to talk
take
about today
one
on the
trade on
show
major news
with
days.
big big tech
Besides
coming out. It's
CPI,
not just
PPI,
Microsoft,
FOMC.
Tesla,
And
only take
Meta
one trade
Platforms,
before
it's
news
IBM,
drops.
it's
Because if
Lam
you try to
Research, it's
take
ServiceNow.
setups and setups while everybody else is just waiting
Earnings
on
still
numbers
the
to drop,
driver here, and I think
you gonna
that's
get cooked.
lifting
You
up
know what I'm saying?
equities.
Today,
but,
I would have got paid on the second trade,
pretty
but
surprising that we're seeing
9
that
times out of
pullback
10 on the
from
other F1Cs,
early morning
bro,
highs.
the more I trade during those days, I
Kevin, I'm
lose.
curious to
You
know
know
your
what I'm saying?
take. As Tom
So, like,
mentioned, you know,
the beginning
we're
of last
seeing
year,
this kind of
I started that
pullback,
rule
and
that
I'm curious
on
to know if you think this is
FOMCs, I
surprising.
only take
Also,
one trade
we've got
during the
move
day,
in metals
and if
as
it
well.
loses,
It feels like we're
then I'll
waiting for
wait
the
for
Fed.
FOMC,
We are
and then the
waiting
whole
for
last
tech.
year
What's your
it just
take?
was hitting for me. You know what I'm saying?
Yeah, I think the biggest
Oh,
move
I'm
so
sorry.
far today really
The
is
beginning
the
of
move in the U.S.
2024
dollar.
is when I
From
started that
down
rule.
to
I'm
up.
sorry,
When
not
Scott
2025.
Bessent
I'm thinking
started saying
I'm thinking it's
they're not
2025.
intervening in any currency.
The beginning of
And so you
2024 is when I started
see
that
the dollar
rule.
rally.
So through 2024 and 2025, bro, it's just great.
Sitting around
It's been
96.
working perfectly.
Did you not agree with anything? Our listeners to widen out. Go to
Nah,
the
I
10-year
didn't tell
chart
him. I didn't.
of the U.S.
I mean,
dollar.
I told him
In
that I was taking
2018,
puts
it was
right here
88.
when he said markets, but he think markets about to bounce. I was like, nah, I don't know, cuz I
It
was
spent
taking
a lot
puts
of
here.
time between 90 and
You know what I'm
93.
saying? I kind of told him that, but I don't know
the
if he
dollar,
ended up
though
taking
it's
calls
moved
or
off
if he
its
just
recent highs, was historically high. So I don't think the dollar moving down to 96 is anything to be worried about. That said,
I wouldn't
it
expect
is
him to take
firming
it.
up,
Like I said, it's
going from
706,
negative
bro.
to positive. Remember, I think that's been part of the fuel on some of the metals
Gotta be careful, bro.
the last few days.
told him
Let's see how they finish the day. I mean,
Nah, I know that. I know that.
what gold and
FOMC, boy, I already know.
is nothing short of
Oh yeah.
incredible.
FOMC today, you make big money,
So
bro.
that's
Like I think
something
my last
certainly
FOMC,
worth
bro,
watching.
gave me 2 trades.
I think
One
when
went
it
like
comes to
180%,
yields,
and
if
the
you
other
look
one
at yields
went like
the last 10 days,
120%. FOMC,
413
bro.
to 4.3,
It'll bless you.
now sitting about 4.25.
It'll bless you real
I think
good.
Jerome Powell's going to have a
yeah.
lot to
Gotta
do
know
about
how to
that
trade it.
sometimes this afternoon. So
That's why these
does
little
he come
trades
out
here and
dovish?
there that I like this trade here that I just missed. I'm not even mad, bro, because I know
Of what he
FOMC
could
about to
possibly
bless.
talk about today, it's going to be, I don't think there'll be any real news at the announcement, but the press
2 to
conference
2:30.
could be quite worth watching in terms of the range
Eastern Standard. Yep.
of
So
what he's
we're
going to
at
answer
1 to
questions
1:30.
or will he answer questions on some
Right.
of the things. So earnings after the bell are going to be huge. Late afternoon trading day will be taken over by the Fed, and then we're all into Microsoft, Tesla, and Meta. It's going to be a big day. Buckle up, Diane. We're just getting started.
I know, that's a great point. And you made the point earlier that we're going to be revving up throughout the day, like it was going to start slow, but then all of a sudden you hit the gas today. And great point about the metals. You have gold higher by more than 4% right now. It had earlier was above $5,300 an ounce. Right now it's close to that. Silver still rallying up 8% right now. Big moves in the metals. So there's still momentum there. But they say you got to be careful, especially when it comes to silver. Let's talk about NVIDIA. Those shares still holding on to a gain today after that green light from China, according to reports, to purchase its H200 chips. You also have ASML blowing past expectations. Record $15.8 billion when converted to dollars in new orders for the quarter. It shows that AI demand is still booming. Tom, what's your take?
Yeah, it's definitely a lift for NVIDIA, because they're not able to report any revenues out of China at this point. So anything is going to be a bonus for this company. I think one of the things that we have to take a look at, whether it's TSM's earnings last week, ASML earnings this week, it's kind of reiterating the fact that the AI build-out and this tech boom that we're seeing is doing well for the picks and shovels within the industry, right? The equipment makers, right? The high-tech equipment that's needed to produce this stuff. Taiwan Semiconductor, they don't have the capacity to meet demand right now. ASML, leader in this space, they don't have the capacity to meet the demand. So they're extending their bookings. That's great, right? But how does it equate to NVIDIA, which is still down 10% from its record highs? Valuations are coming back in line from what they were over the last couple of years, so it's maybe fair valued at this point. It just can't seem to get back to those record highs. So this is definitely a bonus for that company. I think one of the key things, and I mentioned, recently I've mentioned that the services side of the SaaS names, software names that are not participating in this big rally. Well, the picks and shovel companies are winning big, but the software companies aren't. We get ServiceNow after the close today. What kind of story will they tell at this point? Their CEO, Bill McDermott's usually pretty good on those conference calls, but the demand's still there, so that should benefit NVIDIA and the opening up of a new area of sales in China for them. That should be a benefit for NVIDIA. We'll have to wait and see. They don't report for a few weeks here, so we'll get some more clarity on that. But yeah, the picks and shovels are winning. NVIDIA catching a nice bid with a lot of the chip names now down on the day and off of their highs.
Okay, great point. So NVIDIA still holding up. Kevin, what's your take when you look across NVIDIA and also the latest report from ASML?
Yeah, this space is now, I say this a lot, I follow the news flow. And the news flow on these is all pretty positive right now. But Tom's right. NVIDIA kind of underperforming. Why? Well, it's got a lot more open shares. It takes a lot more inertia to get these stocks to move than it did before. So I'm looking at stocks like NVIDIA, AMD, Broadcom. They're all doing better because of this, although they're all, this trading day is far from over. They were all up in the morning. Then you've got the memory names that were all strong after Seagate's earnings. So there's a lot of good things going on in this space. Jensen Huang really talking about that we're still early in this build out, and he's been quite vocal. I just think that right now you got to see this group as still a momentum driver of this market. Remember, I look at the equal weight. It's unchanged. The S&P right now is down slightly, but the equal weight is up. But yesterday, that was flipped to the S&P higher, equal weight down. So I just think the leadership is back into that group now. And you can start with NVIDIA, and then there's a Christmas tree of related stocks that are related to that will move in line. But this is certainly good news from NVIDIA. I think the number they put out once from China was $400 billion in revenue that they lost when they cut off China. I don't know if it'll get to that level, but selling H200 chips is a pretty good start there.
Okay, I'm glad you mentioned Seagate. Shares of Seagate, they are still soaring up. What is it, 18% right now? I mean, Tom, you called this one yesterday in terms of what the options market was pricing in, and initially it looked like around that amount, but it's like almost double that amount now in terms of the gain that we're seeing. You got that company soaring after it beat expectations. They issued a strong outlook. What's your thought, Tom?
Yeah, initially the stock sold off a little bit right after the earnings came out, and I'm like, why is this stock selling out? Off because of the fact that maybe the bar was high on it, but now you're seeing the results here. Beat soundly on EPS, top line revenue. They guided for Q3, the current quarter right now, 320 to 360. Consensus was near $3, and then they upped their Q3 revenue guidance also from about 2.8 billion, 2.8 to 3 billion from 2.8. You know what? The CEO basically came out and said, setting new records for gross margin, operating margins, non-GAAP EPS, AI amplification, demand for their products continues to ramp up. Remember, they're sold out through 2026 and into a portion of 2027. So good guidance here also. You're seeing that reflected in some of the other moves within the space, whether it's Western Digital hitting another records, Micron up about 5%, SanDisk rallying over 7%. So yeah, this was a good report. The street anticipated. I think one of the things that maybe somebody that, a lot of the analysts up their price targets, of course, on this name, but you got to start looking at valuations because this is still a cyclical area within the marketplace, within the chip space. So when more capacity comes online, and that's not supposed to be until 2027, 2028 as they ramp up, the production just to meet demand, will that cyclicality come back in? But it doesn't look like it's going to be anytime soon, guys.
Okay, and let's talk about Starbucks. Kevin, you called this one. Now, listen, we're off the highs of the session. We've still got a little bit of a Java jolt. Maybe we need a little bit more caffeine for this stock right now. They had mixed quarterly results, but traffic was up for Starbucks. Kevin, does this line up with what you were expecting going into this?
Brian Niccol is the fixer. There it is. He can get into a company and get it back on the right track, and that's what you're doing. Number one, he's fixing the U.S. He's got same-store sales in U.S. up 4%. First time in transaction volume for 8 quarters. First time in 8 quarters, volumes are up 3%. How about this? He's going to keep growing this company. 450 to 500 new stores in terms of international growth, half of that in China. So you think a company like Starbucks can't grow anymore, you're not thinking right. Possibly in the U.S., but not international. And he's fixing this company one move at a time, just like he did in Taco Bell, just like he did in Chipotle. Now he's starting to set his teeth into Starbucks. And, it was nothing but good news, though they did miss on earnings per share at 56 cents versus 59. They had a nice beat on revenue at 9.92 billion. So all these things, Brian Niccol, if you give him, every quarter that he's there, he'll make improvements and get this company back in the right place. So very, great news for Starbucks shareholders, great news for Brian Niccol.
Yeah, they pointed out that the traffic grew 3%, so that was solid for them, especially after what traffic has looked like for the past couple years, first time in a couple years there. So definitely some strength there. We'll see how Starbucks performs throughout today's session, if they need a little afternoon caffeine. All right, guys, let's put a pin in the conversation. We have got bull versus bear coming up. The guys will get their example trades put together for Tesla. Will that one rev up? It's got earnings due after the bell. We'll have more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Shares of Tesla revving up today as Wall Street prepares for its results due after the bell. But analysts say don't expect much when it comes to its current bread and butter. Consensus expectations are looking for earnings of 45 cents per share, which would mark a weaker quarter. Revenue is expected to come in a touch above $25 billion. Now, keep in mind, EV deliveries fell in the fourth quarter to below 419,000. That's tied in part to the loss of that key federal tax credit. Those who are believers in Tesla say it's about the road ahead, meaning updates on the robo-taxi and humanoid robots. All right, time now for the tug of war on Tesla. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, we've got to talk your take on Tesla. Kevin, I'll start with you. Your thoughts?
I think what Elon Musk is doing, and you're right, EVs are going through a bit of a winter right now. You see that in the legacy car makers in the U.S. Elon Musk, though, is setting that company up to not only win when it comes to EVs. Remember, making EVs is just one part. I think moving full self-driving to a subscription service is really big. I think he's setting up supercharging, car rental, insurance, full self-driving, that he's moving to subscription. That's all recurring revenue. He's setting up the future of automotive. And I think, yes, hopefully he'll talk about the robo-taxi. Hopefully he'll talk about the Optimus robot, energy storage. Remember, the energy storage numbers at the end of the quarter were really good. That may help them beat on earnings. So watch the energy storage numbers that they take in. But still, if you're going to be really bullish about this name, it's about the future. Every quarter we get closer to all these new products hitting the market. And I think that's what people will either react positively or negatively to, Diane and Tom. I don't know how they'll react. It has a lot to do with Elon Musk's presentation, though.
Okay, great point, right? And can he continue to make believers in this one? Tom, what's your take?
Yeah, I mean, the market's basically ignoring the numbers that came out earlier this month, right? That 15% drop in Q4 sales from a year ago, the 8% drop in 2025 from 2024. They're just discounting that, and now the EV tax credits are gone, so that continues to kind of hurt this company. But as Kevin mentioned, the price of the stock is not based on any of that information. It's based on FSD rolling out into more cities, the subscription service, the Optimus robot. They're going to start selling those to the public in 2027. So this is, if you've got the patience, and I think that's probably the difference between, and the bifurcation in this stock is, hey, it's not valued correctly, or it is valued correctly, because you have to look forward. Stocks are a forward-looking product that, if you have the patience, maybe this does pay off, maybe it doesn't. We've heard a lot of promises from Elon Musk over the years. They haven't come into fruition. And then you throw in the SpaceX IPO, the Grok portion of the business. Does that go public eventually? There's a lot of spinning wheels on this one, and that's why you see the bifurcation, I think, in what the analysts think and what investors think. But we're still, just below all-time highs by about 12-13%. So yeah, we'll have to wait and see on this one. Just expect some volatility post-earnings, and then wait for the conference call.
Expect some volatility post-earnings. Yeah, it's true, because the conference call, that's when he often gets on there and, starts really talking about the future and puts a timeline. So it'll be interesting to see what is the new timeline, or, in terms of the next steps, especially when it comes to the cyber cabs. All right, let's get into the example trades. Kevin, let's start out with yours.
So what I did, just like Tom and I were just talking about, I looked to the future of this company. And so if you're bullish, that may be the way you're doing it. So I looked at the February 27th, Diane. I gave myself a full month for this position to work. And I gave myself a $50 unbalanced butterfly. Unbalanced, remember. I bought the 450 call in the Feb 27th, sold 2 of the 500 calls, and then bought 1 of the 520 calls. So that gives me that about 18, almost a 19 long delta in Tesla. It gives me duration, and it gives me a move towards $500. Remember, the old high was like $498. So this is a move towards $500. And then I'm short the 500, 520 call vertical, chipping away at the net debit. I put it in for about $9.70. Trading about 20 cents higher than that right now, but just under $10. But this is one that, if it moves to the upside, remember, it's a directional play. The risk is the debit paid. It's a directional play where you're looking for that $50 call vertical to go somewhere near $50. But if it goes through it and higher, you don't lose all your money. You just lose the difference between that 500 and 520 strike. So an unbalanced butterfly giving you long deltas in Tesla, Tom. We do this trade a lot. It's directional, but it's in the butterfly family, but it saves that upside exposure.
Yeah, a little bit of a tweak to this one, too, because you're actually buying it out of the money to the upside on this one. But let's break this one down. February 27th weekly options expires in 30 days. So this isn't a pure earnings play, so you have some duration on this. Buy one of the 450 strike call. That's out of the money by about $15 to the upside. Sell two of the 500 strike calls. That's where you want it to go. And then wrap it up by buying one of the 520 calls. So as Kevin mentioned, buying a $50 wide bullish call vertical, offsetting some of the costs by selling a $20 wide call vertical against it with that same short common strike where you're short two options on the 500 strike, paying roughly about a $970 debit. The debit you pay is going to be your risk, so $970 per spread. You can see the break even there, 459.70 to the upside. That's about nearly 6% above the current share price. So this is a bullish trade. You need a move. I think the differentiator in this one is that Kevin's given himself 30 days in this trade. So even if you don't get the move post-earnings, you still have time in this position for the trade to develop. Now, you look at the risk-reward profile, pretty good. You're risking less than $1,000 to potentially make close to $4,000 if it goes at or near 500. But even if it goes above 520 and continues to move to record highs, it's still going to be more than a double. It is going to be a double in profitability, even above 520. Just some of that profitability comes out of this position. But this is definitely, you need a move to the upside, but you've got 30 days in this position. Let's look at a different way that I looked at Tesla. It's neutral, but bearish also. I call this the Kevin trade because it's a complex trade. It's four legs. You're using one portion of this trade to help finance the directional part of this trade. So I looked at buying a 1 week wide put calendar to the downside on the 410 strike and selling a call vertical to help finance that. So let's break this one down. January 30th weekly options that expire in 2 days. Sell the 450 call that's out of the money to the upside, about 15, 18 bucks here. Sell the 450 call, buy the 460 strike call. That it creates a credit, and then that helps the purchase price of the 1 week wide 410 put calendar, where I'm buying the February 6th weekly options that expire in 9 days. Buy that 410 put, sell the same 410 put in the near-term January 30th weekly options that expire in a couple days. Your cost on this is going to be basically about even. You might even collect a little bit of a credit, but if it's even, if you pay even for this or zero, it takes your break even to the upside to 450. So you want the stock to remain below 450 because you're short that 450, 460 call vertical. And you can see here from the risk profile, the apex of profitability is at or near that 410 strike. Well, why did I pick the 410 strike? Well, that's what the option market's pricing in, about that one standard deviation move to the downside on this one. And because you're doing this trade for even or maybe even a little credit, anything below that 450 level is going to be potential profitability on this one. Kevin, your take here on the complex four-legged spread.
Establishing your direction, in this case bearish, and then using the short call vertical, which gives you neutral to bearish, to finance the purchasing of the downside calendar. And this is one that, if nothing happens and the stock stays right here, my trade would lose money if the stock stayed right here. Yours would still be profitable, Tom. There's the difference between selling that upside call and buying an upside butterfly out of the money. So yeah, this is one that would be profitable if nothing happened and the stock stayed right here.
The ideal situation is the stock creeps down about that one standard deviation. That'll expand the price of that calendar and decrease the price of that call vertical that you sold to help finance the purchase of the 1 week wide put calendar to the downside. So there you go, Diane. Kevin needs a move to the upside to give himself duration, find shorter term on the bearish example.
Good stuff, you guys. Choose your own adventure there. Coming up, cash tags. The team from Likefolio will be along with a status update on Meta.
How you gonna say who is it? I don't think they rap on
and Instagram. Keep it right here on Schwab Network. Fast Market. We'll be back.
That don't mean they ain't cold though. Andre 2000 one of the greatest ever rap.
That's what I told.
You crazy.
I'm Alex.
Indeed. And I'm his mom.
Andre was the coldest.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Bartis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
But I'm up on the mic. I need to be close.
Trading at Schwab is powered by Ameritrade.
Yeah.
Even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Which is crazy. I probably
get
like I knew I should
24/7
have
live
took that
help
second trade yesterday
and
too,
access
because
support
I had
by
already
phone,
made it caught a 38% or like second five
in-platform
minute
chat.
tail of the market.
Trade easy with Schwab.
Whether you're
That's
an
why I was like,
experienced
man, I mean,
investor or
it's
just
there,
getting
but
started, Charles Schwab offers a
risky.
webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding
Yeah,
of
funny thing
technical
is the trade
analysis,
that I lost
options,
today.
futures, and more. Best
I
of
have a
all,
rule.
you can ask questions by chatting
Like if my first
directly
trade don't
with an
hit,
education
then I
coach.
wait till FOMC
It's
start, then I
interactive
trade
learning at
FOMC.
its finest. Tune in live or
So
watch on
yeah,
demand.
so today I lost my
Head
first
over to
trade, but then the next trade that I would have taken ended up going like 88%. But I didn't take it though. I didn't take it because I'm waiting for FOMC to start. Stick to my plan, cuz.
No politics, no
Gotta
spin.
stick to your rules.
Just the market from open to
If
close
you break
and
one of your
beyond.
rules,
Streaming
it'll open the door for you to
24/7,
break the
any
other
screen,
ones.
anywhere at schwabnetwork.com.
That's what I told him, bro.
Welcome back to Fast Market on
So
the
you just
Schwab
gotta
Network.
stay
Diane
disciplined.
alongside
Stay
Nick
grounded.
over at the SIBO. Time now for our hashtag segment. Tonight we want to bring in our next guest, and that is Landon Swan,
That's why I told
co-founder
people
of
too.
Likefolio. All right,
Told him
today
that,
we
bro.
are taking a look at
Good
Meta,
covers.
the parent company of just about every social media platform that we use,
That's another one.
along with WhatsApp. So you've got the latest
That's
look
what
at
we
what
do, same thing.
data looks like
That's why I
in
gotta break my
Meta
rules, bro.
and beyond.
No matter what.
Tell us where things stand now, Landon.
Yeah, so I mean, right now we're looking at the stock is basically where it ended up after
Cause you out here with ducks, cuz.
disappointing earnings report. It went from
I think so,
750
bro. I
down to
heard some ducks.
670. It's kind of bounced around a little bit, but now back at 670.
Where you at
Hasn't
for
filled
real,
that
bro?
gap
Are
yet,
you
so
flying?
that's going to be interesting to see if it does. It did fill the gap on the
Yeah,
previous
so
earnings
it's
report,
flying.
so we'll see if this one fills. But you know, all of
How
these
you in a
companies,
parachute?
as you said,
You in a
it's
parachute?
dominating. You know, over half the world uses one of their products on a pretty much daily basis or monthly basis at the very least.
He's an
And
Aaron girl
what's
right
interesting
now,
about this report is
There you go.
it's
Yeah.
a rare situation where most
Flying
of the
in the
investors
sand.
are looking at
Yeah.
the expenses versus the revenue. And you know, that
Said
kind
just
of
flying in
puts
the Miramar,
Likefolio at a
cuz.
slight disadvantage because we have insight into revenue.
Hey, I bought a
We
put
don't
too,
have
bro.
insight
On
into expenses,
on
but
next
I can
car, I
tell you
bought
the
a put.
revenue's strong. You know, they're
You
doing
bought some,
well. Everything's
you
looking
some put?
pretty
I bought a
solid.
put on
And
next
you look
car.
at the ad spend
When?
on a year-over-year basis.
Today I
Just
did.
just visits to the ad platform up 7% on a year-over-year basis, and that's from a very
It's
high.
running up like
On what ticker?
So we know that engagement on
NXT.
Instagram and Reels is going higher and higher. They're using
NXT,
AI
what's
to
that?
really drive that engagement and keep people involved. We know that ads are converting better. In fact, they just started using the AI chats
We got
to
FOMC starting
introduce
what,
ads.
about
If
an hour and a
you ask
half?
about something,
About an hour, actually.
it's
Well,
going to
yeah,
start
about an hour and a
serving you
half.
ads in a way that feels like it's an AI chat, so you're more likely to buy. In fact, the conversion rate for those are 31% higher than just searching on things
I gotta
normally.
put it
So
on next
they're
car.
absolutely leveraging technology. It's looking very strong for Meta. On the revenue side, the expense
FOMC
side,
about
I
to
think
go
where people are
stupid.
concerned. That's what got them on the last quarterly report. Investors want to know, what are you
Hell
doing
no,
about
not until
all the
FOMC start.
capex? And we talked about this not
Hey,
too
we got
long
another
ago.
hour
I
and a
mean,
half.
this
Where you at,
is a
Chuck?
bit of an
2K, bro?
arms race when it comes to technology. Meta is right in the middle of it. They've got to be the best. They've got the most users, so
You at
why
work?
not
Not
press
really
that
at work?
advantage? They are making money, so spend it and try to get the lead. That's my opinion. Not everyone sees it that way. They see numbers like
be doing that,
22
bro.
billion likely spent in last quarter, maybe stretching that
You
to
thought it's
over
nice,
100 billion over this next year. And what are we
Word.
going to
That's
have
what
to
I'm
show
doing
for
right
it?
now. I'm doing
And
some
my
stuff
answer
that
to those
people can
investors
do.
would be, you might have the lead in
Hey,
AI,
don't got him
and you
again. as soon as
and
he
that's a
said
great
that shit.
combination. So I think it's smart for them to
Damn, got
strive for
cold,
that.
too.
As an investor, I would not
I told
be
y'all we
too
was
worried
live.
if
Y'all
they told me
talking
that
about
they
that
were going to go
bullshit.
north of 100 billion because they want to win this AI race. They are sort of winding down, or at least decreasing spend on.
Hey, what
the
up,
whole
Trey?
multi-
What we
you know,
invite, Trey?
yes, it was a
Where you
miss,
at, bro?
but you got to take shots. And when you've got 80% gross margins and 40% operating margins, and half the world's
Plus, I'm up
using
on my
your services,
shirts.
I think you've got money to burn, and you've got to take
I
some
just bought
shots
some more
because all the
shirts.
little guys are
That's
going
why I
all
was
in
fired.
trying
I
to
was
come
buying
for
some
you.
shirts.
So you got to stay ahead of them. So what
Sure.
we're seeing is across
I just
all of
bought
their
some shirts. I just
platforms,
bought some
overall
silver.
very strong numbers. When we look at them specifically,
Yeah, we're gonna hold it
Instagram
for
is
the
up
long
10%
haul, okay?
on a year-over-year basis. Like I said, the ads
I'll
platform
get some
is
more
up
money
7%.
when I print.
Facebook,
I'm
you
about
know,
a
kind of
whole
just hang in
ETL,
there, and then
okay?
WhatsApp, far less important, is down a little bit.
We're
But I
gonna
think
try to hold it for the
Instagram
whole
is
year.
the main
Don't let
one
me
that's
sell it,
driving
okay?
this this surge in
Real.
usage.
When I
It
say
has been for
I'm
quite a
doing
while.
bad
It
or something,
continues to be.
say don't sell
And
nothing.
so, we're seeing that
But
the
feel like I'm
price
gonna
per
sell
ad
something.
is up
Make
10%.
me put it into the Staples
People are
account.
using it more. They're
You know
getting
what I'm
more
saying?
ads. They're getting
I'll
better
slap you
conversions.
with
They're
it.
willing to pay
And
more.
say put it in the
Businesses are
Staples
willing to
account.
pay
Nah,
more.
listen.
So Meta's in a good spot. But again, investors want to see
But I
that
need
they're
him to say it, so
decreasing
where he at?
spending, or at least not decreasing, but they're not going crazy on spending. I'm in the other camp. I say invest as much as you can, figure it out, and become the world leader in all
If I say it
technology.
to her,
Because
she gonna be
again,
well,
they
she gonna
have
be scared
such
as
an
hell.
asset. You know, over half
Be
the
fired
world
up?
using them.
No,
it's
she's just gonna be
unbelievable
scared.
the leverage that they have. If this was a startup that just IPO'd and they're trying to figure things out, yeah, you got to watch your spend. You got to get some traction.
Look
Well,
at
Meta's
RR's
got
trying
the
to just be
ultimate
bullish
traction.
right
They've
now.
got everybody using it.
It came
so
down.
You said what?
go for it and see what you
RR's
come
trying to
up with.
recover his losses today.
Landon, I think you can break
Plus,
down this.
I'm getting impatient, bro. I got some money I
into
need to be
two
trading
words,
right now.
And that is
Shit.
spending discipline.
Got me
Doesn't
here
mean you
waiting all
can't
day
spend.
for.
Doesn't mean you can't spend on the
As soon
right
as he
things.
come
Patient,
out,
cuz.
as soon as he come out, the market gonna be closed and shit. Gonna be trying to do a zero DTE on the last 30 minutes and shit.
They got to go through. Remember how the stock
Market gonna
rallied?
be closed.
If you
I'm gonna
really
get
interested
liquidated.
in the stock going
And I'm
higher,
gonna make
they've got to
200-300%
show
on it.
some
Because I'm being
discipline.
patient. You
Now,
not.
the good news is
I am
they
being
just
patient.
cut Reality
Ain't that-
Labs workforce
I
by
did a
10%.
couple trades, but I'm
So
patiently
they're
waiting
doing
still.
some of it in some
See?
places, but they
What?
Market's
can't
gonna test your
do
patience,
the
bro.
drunken sailor spend on AI. They've got to at
You
least
sit in
start
front of
to
the market
show
and not take a
discipline
trade and just
in
wait.
some areas, or
Don't seem like you
the
can,
stock
cuz.
trader, the street's not gonna like
You're
it,
having a little
just
trouble
like
doing
they
that,
didn't
cuz.
like it the last time because the numbers were bigger than expected. So
Get
you're
me?
right. I think this company has so many good things going for it, but I'm
How
gonna
many more
bring
trades you
up
got for
one
today?
point, Landon, and I want to hear your comments.
I got some money in my
AI
cash accounts.
is annoying how it creates
That's if they let me
stories
do
on
a
Facebook
trade.
that aren't true
Matter of fact,
or
if I put some
accurate.
time on it, they
And
should
it
let me do a
feels like
trade.
it's
But
almost starting to wear
they'll be
on
trying to
my
protect me, bro.
confidence on being on Facebook. I go on Facebook a
Nah, I
lot
don't need them
to
to
talk
protect
with
me. I protect
friends
myself.
and
Just let
family.
me just feel me where I need to be
These
filled at.
AI-generated
that?
stories are
Yeah,
annoying,
that's what
Landon.
you said.
Yeah, you know
I
what?
told
Look,
them that.
I'm more of an
Yeah, don't
X or
protect me.
Twitter guy, but I do use Instagram occasionally. But I will tell you, I've seen it there as well, and I think that as AI becomes
out
more and
then,
more
buddy.
powerful, we're going to
You
see a
are
lot
trying
of
to outwork.
annoying things, and they've got to figure out a way to let the
Should I
market
buy some
speak.
more
So they've
contracts
got to
on
let
Auto, bro?
the Kevin Hinks of the world be like, you know what? Don't show me this anymore, and
bro.
punish the producers of
Dang,
that kind of
Q's came
content.
all the way
However,
down here from where I bought
I'm
it.
pretty confident that a year from now, it's still going to be
Dang, bro, what they
extremely
do to the
relevant.
Qs,
Even
bro?
if there's a little bit of growing pains
It's
as it
almost
becomes,
a
as
good
you say,
buy.
annoying. And
Probably
I
when
couldn't
Daddy
agree
Powell
more,
come out, it's
because
gonna be a time
it's
to buy
getting
Qs.
really easy for
But
content
you better stop calling that
producers
nigga Daddy, bro.
to just try a bunch of stuff very
his name?
cheaply. AI
Sharon,
slop is what
nigga.
they're calling
He
it
don't make
these
it
days,
right.
and you'd probably agree with that term. But
His
yeah,
name
just
is
it's very
Sharon.
cheap. It's very
When he
easy
come
to
out, he
do.
gonna
And
make it
I
right,
have
bro.
confidence in free markets being able to
I call
reject
that nigga
that. So
Jerome.
we'll see what happens there. But when you look at the business
I
use
got
case
one
again,
daddy, nigga. His name is Troy Boyd, nigga.
Yeah.
From 18th Street, Victory Park, California Park, nigga.
Yeah.
For example, 80% of consumers say they use social media to find gifts, and if they're getting on there and talking to
Troy
to
Boyd.
get gifts, they're converting on those ads at, like I said, 31% higher. So the business use
You never
case
met
is
my daddy?
extremely strong. Don't even get me started on the software development side. I think it's unbelievable. But there is definitely some AI stuff out there, and I think it's gonna just wear on people a little bit.
Nah,
As
I'm
soon
sorry,
as someone
Troy.
solves it, it'll be a great fix. And hey, wouldn't you rather have somebody spending a lot of money? So I'm in the opposite camp on the, I wouldn't say drunken sailor spending, but I would say because that's the only way that they can lose. You know, sometimes I like to think about what can go wrong with
They're saying
my
this
plan as
Spartacus
opposed
is
to how do I
good, bro. I'm gonna
execute
check
my
this
plan,
out.
what
I'll watch
prevents
it
it from
later.
working.
You ain't seen
And
that?
for Meta, it's someone else coming in and
Spartacus
solving
it's a new
technology in a
TV
way
show,
they
new
haven't done.
series.
Oh, it's
You know,
new.
you
You
can
new
go
it.
back in time and look
Yeah, I
at,
haven't
you know,
watched it.
Facebook,
Everybody's
Instagram,
saying
they
it's
weren't
good.
always the number one social media site. Someone else
I'm,
made
I'm,
them
I'm
right.
an avid
MySpace
TV
used to
show
be
watcher
really
because
huge, and
while I'm trading,
Facebook
I'll
beat
watch
them.
my TV
Before
shows.
that, there was others, and so
Very dope.
it's possible, right?
We
It's
play
possible that Facebook
Underrateds
and
and
Instagram
2K.
could lose this race
I
over
do
the
not
next
play
5 to
2K.
10 years. The way to defend against that is to make sure you're on top of
Because I used to play, we used to go over Uncle
I
Tommy's
say
house
maybe
every
not drug
day and play
sailor, but
2K.
how
It
about
would
buzz
be me,
sailor?
it would
Go
be
ahead and spend a lot
me,
of money.
Chris,
But
Uncle
that's why
Tommy.
they bought
Hell no, I was the
Instagram,
best
right?
one in the house.
Because, you know,
Excellent.
their Facebook,
Nigga,
they're
they used to,
losing traction
I used to
like
terrorize
your
them.
chart
Cause
shows,
they
and
used
it
to,
does
they
feel
used to
like
tell
when
me,
you
hey,
go there,
Chris,
there's a lot of
20, if you
mishmash
20 stuff
happening
in, I'll
there.
take you to McDonald's and get you a big
And,
meal,
you know,
a
it's
Big
just
Mac
kind of
meal.
random, not tumbling
Yeah.
going through your neighborhood, but some,
Them
it's
niggas,
just
when
random.
we would all be in there
But
arguing.
Instagram,
We
to
would
your
all be
point,
in
I'm
there
not
arguing, talking
surprised to
smack.
see
And
what
if
the data
somebody
looks
get
like for
beat,
Instagram,
somebody like,
because
let's
they've
say,
figured out a way to, you know,
Uncle
be
Tommy
more
beat
sticky
Chris.
there, right? It's the reels.
He'll be like, Trey, play this
And
nigga,
then
man.
remember, it
I'll
took
be
them
like,
some
I'll
time to
have
figure
next.
out
Look, Trey, if you
monetizing
20
that
stuff,
with the
I'll go get you a
advertising
Big Mac
in the
meal.
reels. People stick around to watch those reels. But I want to ask you something about that chart that you have where it's the liquids versus the
I used to
stock
run
price.
through
When you
them
had that
niggas.
up, I can
Run
see in
through
the
'em.
top corner there where it looks like there's a little bit of a dip starting to happen in web visitors.
Yeah, it'll be me
Is
every
that
day, though.
something
It'll
that
be
you're
me,
concerned
Uncle
about
Tommy,
and misreading
Chris,
that?
Uncle Man,
You're
James.
largely misreading it. I mean, if you look at those bumps, I mean, that's
Yeah,
basically
and then just
weekly
come over
bumps.
sometimes. He used to be
So
cracking over there.
that is, you know, just a standard little weekly thing. It's maybe slightly
What?
slower
Cuz,
on
you
that
gotta ask,
extreme
bro,
uptrend,
next time
but
you see
compare
James,
that
ask
circle
that
on the
nigga
right to
James.
the left, that's the year-over-year comparison.
I
So
just
it's a
got tired
very
of it,
strong
bro. After like
year-over-year
2K15,
comparison.
I was just like, I'm
And
done
generally
with 2K,
speaking,
bro.
obviously, the more people that go,
Just
the
got
more
tired
ads
of
they're
it,
going to
really.
serve. And as we know,
Niggas
people
just
are
making
starting to
daily
convert higher.
guys
There's
and
more engagement, so it's not just more
trash.
people going; it's
Started
more
making
people
the game
staying
trash.
on longer,
To
watching
me,
more ads.
but I heard
Those
it's
ads
back.
are
I heard the
converting
game is
more,
good
and
though.
prices are going up 10%. It's a flywheel
Yeah,
that
I just
compounds over
just
time,
ain't played it.
and the revenue is just going to continue to climb. So with the margins that they
Just
got,
ain't
obviously
played it.
they're finding themselves
But I
in a
heard
very
it's nice
strong
though.
spot. But yeah, this is
But nah, ask that nigga
obviously
James
this
next time
is
you see
a
him.
fairly bullish
James used to
chart.
get
So
all his
just
little homies
looking
from
at the
Southern over to
revenue
his
side of
house.
things, which is what
And nigga,
generally
he used to
speaking my
have me
portfolio likes
play
to
them
do,
niggas in
just look
2K,
at revenue
$20 a
because we
game.
don't have insights
Nigga,
into
that was
expenses,
nigga.
and
We
this
would
is the
do it
one
like
company
every,
that everybody's
probably like
eyes
2,
are on
3 times a
expenses. So
year.
you know, I
Nigga,
would say
every
that
time
our
we used to
advantage
do
on
it, bro.
this is
Nigga, I used
from
to
a
walk
data
out with like
perspective that my
800 to
portfolio is a
$1,000.
little bit
Not
watered
even
down
lying, bro.
because
Ask
of the
James.
emphasis on expenses. However,
I'll give James like I'll give James like
that the
1,
revenues are
150.
going to come in and
I'll
not
keep like a
disappoint.
rack,
They're going
800
to be
to a
strong,
rack.
and then it's just a question of the expenses. So with
Cause like
you know
James
with
like,
what the
cause I'll
stock
put your,
has
I'll
done,
put the money up for
again
you.
going from
You can
750
keep
to
most of it.
670 on the last
Nigga, I was
report,
like,
too much
bet.
spending. It's kind of been
Oh,
sideways
God,
since
I used
then.
to run through
Now
that
we've
nigga
got this,
Freeman.
80-point gap above us that, if you're a technical trader, you
Man.
like to believe those gaps will fill. We're trading right at that bottom of that area.
Nah, I know it's
So
going.
I would
What's
say
the
that
nigga? Man, yeah, Uncle Man
if
be
investors
playing
can be
with each
satisfied
other. They
with
got
the
the little
answers
squad.
around
They say
capex,
they nice.
then they're less likely to do well.
Yeah, and
off of this
yeah,
report,
they play together.
because I don't think it's going to be a question or a concern when it comes to
Yeah,
revenue.
they got them
So
teams.
we're
They
leaning
said they
slightly
alright.
bullish.
They said them niggas nice.
Plus 27 is our score. Nothing huge, but again, water it down because we don't know
See,
what
I
the
got a
expenses
homie.
are
I got a
coming in
homie
at. We
that
don't know where those investor
I got a
expectations are. We
homie.
know they want them to cut.
I got a homie homie that's not really my homie no more. His name is TJ, bro. His team, his little team that he playing with, bro. Every single year, them niggas is they do pro AM, and every year them niggas is like top 3, top 5 team in pro AM. Yeah, them niggas so cold, bro.
Kevin, you got the example trade on this one. How do you look at it, especially given the insights that we got from the Micfolio team?
Diane, Tom, I think there's a lot of chances for this stock to go in either direction. If everything that Landon said is true, and they keep spending discipline, I think this stock could go higher. I don't know.
2 o'clock.
So if that number comes out, that spending number comes out again, they could disappoint again like they did last quarter. So my thought was play the difference between the implied volatilities.
You said what?
And then look for the double calendar to get you a move in either direction.
Nah, 2 to closing, so 2 to 4.
So what I looked at is a 1 week, February 6th, January 30th, 7:20 call.
Good setups.
and then a 620 put calendar. It's paying about $5.20. It's trading right there. $5.20. You're collecting a fair amount of theta. You're
FOMC, nigga, gonna give you way more than that. I don't know. You ever seen FOMC before?
$45 to $50 move in either direction, Diane. And this one, like I said, you wanted to go to one of the short strikes, and you've got a couple days for that to happen. So you got to have some strong hands, maybe, and you don't want to move way outside that range, as you know. So the double calendar,
the market moves so crazy.
to be profitable in either direction.
Let's break this one down. Option market pricing in about a plus or minus $42 one-day move in either direction on this double calendar position. February 6 weekly options that expire in 9 days. Buy the 720 call and buy the 620 put. And then sell those same options in the January 30th weekly options. Sell the 720 call, sell the 620 put. $100 wide double calendar position. You're paying roughly about a 520 debit. That's your risk, $520 per spread. But you can see here from the risk profile, you got a pretty good range for the stock to trade in post-earnings to be profitable on it. You want it to go either at or near 620 on the downside,
our interest rates, the interest rates for everybody's about to go up, or the interest rates on housing about to go down, and stuff like that.
And maybe 740, 745 on the upside to be potentially profitable on this trade. And Kevin mentioned the vol differential. You're selling about 105%
once every other month, maybe.
In the January 30th weekly options that you're selling the call, buying about a 60% implied volatility on aggregate in the options
sometimes
that you're buying
it's
February
different.
6th.
So we probably have like 10 of them.
But this is one of those strategies where you need a move either way about that one standard deviation. What don't you want to have, right? You don't want to kind of sit here right at the 670 level, and you don't want a 2 standard deviation or a 3 standard deviation move either up or down on this one. The stock fell 11% last quarter on that reset of expectations on CapEx spend. But this is playing the volatility levels here, Diane, where, hey, it's not bullish, not bearish. You just wanted to kind of go about that 1 standard deviation either way on this positive time decay on this long double calendar position.
All right, good stuff, guys. We have got a breakdown coming up. Another member of the Mag 7 on deck to report earnings from Microsoft. And investors have questions about spending there, too. We'll be right back. SATL.
CORD. Yeah. Bro, they over serving my stream, bro. When I was talking about GameStop, bro. But it's in my stream. It's in my stream needs help, bro.
The stream needs help?
My stream, bro.
What's that?
My stream, bro. It was dirty, bro.
Oh, yeah, your screen was dirty. Your screen was dirty.
I cleaned it now, y'all.
Nah, I feel you. I ain't mad at you,
bro. Everybody is roasting me on this. Bro, why is everybody roasting this screen? No. I gotta chill, bro. It's like 7 likes and 7 comments.
Platforms and Tools webcasts are designed
bro, they are
to
wild
broaden
on
your
this
knowledge,
screen, bro.
platform features and resources available from Schwab.
Wicked crazy.
You'll learn tips and tricks to help navigate
I said this nigga be spitting all on the screen. That's what it looked like.
I bet you won't say those in the comments.
You can ask questions by chatting directly with an education coach. It's interactive
yeah, somebody said
it's
like that because the overall market
Tune in
is up.
live or watch on demand. Head over to
Nobody said
schwab.com/coaching
that.
and start learning today.
Let me watch my Spartacus, bro. I'm gonna watch a little Spartacus.
But these Jesus.
Welcome back to Fast Market here on Swap Network. I'm Diane King Hall live on the floor.
Bro, why
on
they
the big
so
board. Before we
funny
get to
in
the
the
breakdown, let me give you a check
comments,
on where markets stand as we get closer to the
Hey,
bottom of
yeah.
the lunch hour here. We've had some flagging,
Yes,
some movement, but we're pretty choppy around
Yeah.
the flat line, range bound. The S&P
Nah,
500
we got
off
an
by
hour 15.
less than a
Bro,
tenth of a
Kiva, they are
percent.
roasting me on my
Dow, the flip
comments
of
about my
that.
screen, bro.
Nasdaq 100 still has a
Yeah.
gain of a quarter percent.
Shit,
Russell
30.
2000 lower by four
Yeah, I
tenths of
know.
a percent.
Have you seen this?
Microsoft
Y'all,
is
do you
next
watch
on deck
shows,
to report
Kiva?
earnings after the close today.
Like TV shows?
Investors keying
Yeah.
in for signs
Yeah.
that the massive AI
Have you seen this
spending
new
has
Spartacus?
a payoff. Keep in mind,
I
Microsoft,
ain't
Meta,
started it.
Alphabet,
I
and
ain't seen the
Amazon are set
original
to spend
Spartacus
more than
either.
Oh, really?
$500 billion for
Yeah, I
capex
heard it was
this
good
year.
though.
And the
Fire.
conversation has
That
shifted
nigga
to
died, right?
returns, not just growth.
Spartacus?
For the quarter, Microsoft is
original
expecting
Oh, you talking about at
revenue of
300?
$80 billion, which would be up on an
No,
annual
Spartacus,
basis.
the TV.
That
You
time
talking
now
about
for
TV
the
show or the
breakdown.
movie?
For that, we want to welcome in
No, I'm
George
talking about
Silla, senior
I
markets
don't know which one.
correspondent,
You
taking
said
a
the
look at
original, so
Microsoft.
I was
So the question
assuming that
going
you
into
were
this, Meta,
talking
They had
about
a
Microsoft,
movie.
whether
That
is
Spartacus
the
TV
spending
show
worth
like
it all?
years ago.
What's the
I don't think I've seen
fundamental
the other
look
Spartacus.
at Microsoft
Yeah,
going
bro,
into
that's
George?
the original one. That nigga died,
Well,
bro.
I think the fundamental take is
Oh,
that, I
really?
mean,
That's
if
the
you
one
look at,
everybody was
the
talking about was
intelligent
so
cloud
good.
business
The
for
dude died though.
Microsoft, just
The
going back
actor.
to last quarter,
Oh,
basically at $31 billion, that's
okay.
almost
Yeah, it
equivalent
came out like
to their
08.
productivity and
Oh
business
yeah,
services
I think I
business,
gotta
which
watch
is
that
really their
one.
core legacy business.
Yeah,
So
my brother used to watch
the
that shit like
intelligent
a
cloud
motherfucker. That's
is
one of his
integrated, of
favorite
course, with
shows,
the
bro. He said
aspects
that
of
shit was
artificial
super good.
intelligence and manifestation of how this
So
investment
I
will
was
play
like,
out. I think
I saw
one
it.
of the
I
things
saw it
you'll
popped
have to
up on
keep
the
in mind
thing.
with
So I'm like,
Microsoft
oh, okay,
is
well,
not
I
necessarily,
might start the
post
original
earnings
Spartacus first,
reaction.
then watch
Obviously,
that.
we're all going to be waiting for
But the
that.
VIX is
Right.
going
But
through the roof.
the price performance, if you look at over the
Yeah,
last
that's
6
starts
months,
dropping.
it's down about 6%,
I don't think it
trending
is,
right
bro.
below the 200-day moving average. It's nested below that.
You don't think
So
Slash
I think
dropping?
what's happened here is, speaking to the
You
way
don't
the
know what
stock
you
has
think, bro.
performed since October of
The
last
Bro,
key,
year,
Slash is
the
dropping.
novelty
this is the
elements
key
behind
point right here,
OpenAI is
bro.
really worn
He's
off.
trying to
It
break
is.
out.
So
No,
for
that
Microsoft,
that
because if
is
you look at
right. What
last
you
quarter,
said.
Q's
the
is
company
trying to break
actually
out,
took about a $3.1
and the
billion
market's trying to
charge
break
on
out too.
earnings,
To make 476
$0.41
was a
a
key level, and
share,
now
Retest
market's
based
trying to
on
bounce
an
off of
asset
it off that
impairment
rejection,
write-down
brother.
of their
You're not
OpenAI
wrong there,
investment,
brother.
which some would say, based on a convertible
But he be
basis,
right about
Understood.
some shit, but
is
he
estimated to be
wrong
around
about
32.5% of
Yeah,
OpenAI.
from what I
So I think
hear.
that's the issue
Yeah,
in
VIX
terms
is
of the
actually
performance for
VIX is actually
Microsoft,
trying to
but
pull back
that can certainly
off the base
change
that it formed
going
at
forward. If you
1710.
look at the EPS estimates for
And
this
it's trying to pull
quarter,
back. It could potentially drop, and
$3.92
if it
is
does drop,
estimated to be about 21%
oh,
higher than
Slash
last
gonna
year's
work.
323 per share. As you
But
mentioned
like I
too,
said,
Diane,
it's gonna drop soon
80.22
as
billion, up
Federal
15%
Jerome
compared to
Powell
last
starts
year.
talking, bro.
that's what I'm saying.
Every time.
From
But your
69.6
technical
billion
analysis
dollars.
kind of
So I think
means
what's going to be
nothing
important
before
here is not necessarily
FOMC
just the
kills. That's what I'm trying to
execution
tell you. So you trying to
aspects of the
analyze the market
intelligent
right
cloud
now,
business,
just
which were
don't.
higher 40% last quarter year over year. That's a
Market
crazy
kind of
report. I think
around news times,
investors will
bro.
be
It
looking at
doesn't
another
respect
potential
anybody's.
either
It
asset
doesn't
impairment
respect
charge on OpenAI or
like key
This
something
is
levels and
which
going,
stuff
we
like
yeah,
could
this
that.
see
is going
that
up and down.
manifesting
It
going
More
just
forward.
don't
battle
So
exactly,
that actually might pivot
because
the stock back to the
everybody's
upside
waiting
from
King
a
for
nice
Country's
clean
market
break
here.
above the
Big
200-day
shadow
moving
guy.
average. But if there's
who?
some hang up in terms
Oh,
of
What's his ass
questions
strategy?
on the investments
Huh?
within
Yeah, he
OpenAI's
say he don't
there's
ecosystem,
little shadows.
that could present some
I don't know who
challenges
he is.
to the
Fool
You
price
have to,
is.
action
you
to
should
the
have to have
downside,
sensitive on the
irrespective
shadow,
of
bro.
the
You
fact
can't
that if
just
you look
buy
at the
both
last
sides.
week, since last Thursday,
Yeah,
both
I don't fool with
Microsoft
it.
and
You
Apple
gotta
have
buy
been
2 or
carrying
3
the
of the
index,
calls,
the
one
S&P
put, or
500 to
3
those
puts, 1 call.
highs we saw earlier today,
today over 7,000. Market can't do much unless these stocks participate. They're starting to, at least from a short-term perspective, there's some positive momentum. But again, that can be questioned down in terms of price action if there's some challenges in terms of the investment returns on artificial intelligence. Plus, I think the other important factor is adoption of Copilot. That'll probably put some analysts focus clearly on that aspect of their enterprise business as well.
All right, thank you, George. That is George Sillis, our senior markets correspondent, with the breakdown on Microsoft. So let's get Tom and Kevin back in here for example trade purposes. Tom, this time you've got the example trade in Microsoft. What's the approach?
Yeah, option market pricing in nearly a $25 move either way in the stock. It's still down nearly 14% from those record highs that we saw months ago, right? This has been a laggard in this space. It's kind of gotten dragged down from some of the software names that have been dragged down to the enterprise side of their business. Cloud's still growing over 25%. So those are the numbers you're going to have to focus on. Remaining performance obligations, cloud growth, and their investments in AI. What you don't probably want to see is a rise in CapEx spending at this point. So I looked at a strategy that takes advantage of, just like
telling
Kevin's
your ass
double
that,
calendar
nigga.
did,
Bruno was right around
this
you and your
type of
girl.
strategy takes advantage of that vol dispersion. Really short-term positioning here. 1
that's
week
fine, Ripper.
call diagonal that's pulled
Absolutely.
for this example. By the February 6th weekly options that expire 9 days, the 480 strike call just out of the money, basically at the money at this point. By the 480 call, and then in the near-term January 30th weekly options, we're going to sell the 505 strike call. It sets up about with that 1 standard deviation move. You can see here from the risk profile, you want to go at or near that 505 level at this point. Bullish $25 wide call diagonal. Paying roughly about a 1080 debit on it.
You know where they're
Probably
at.
trading closer to 1060, but the debit you pay is going to be your risk. So $1,080 per spread. That can more than double on this one. Break even, you need the stock to go up higher, right? Above about 485 to start seeing some profitability on this trade. It's risk defined, Kevin, but taking advantage of that vol dispersion here to lower the entry
Frost,
point
did you
price,
froze?
because if you're paying, you know, 1080 for this,
what y'all was saying
it's
to me.
$25 wide. You're paying
Can't
a
believe
lot
you was
less
saying
in the
it.
width of this call diagonal.
There it is, Tom. You've got a $25
choice of code.
expected move.
And I called you, bro.
That's where you set up your
Yeah, I'm
call
about to get
diagonal.
an
Buying the
QBQ call.
buying the 480, selling the 505. That's just using the tools on the Thinkorswim
Use it the way you
platform
lose it.
to help you with
Hey!
selection.
No!
And understand
No!
the difference between an 86
You're not
vol
gonna
and
do
a
that.
57 vol. That makes it less expensive. So it's just, it doesn't mean you're going to
I
be
like
right.
these premiums
You still got to be
and the
directionally
market might
correct
pull back hella
to
hard
have
later,
this
too.
work. But at least you're setting it up using the tools of the platform that gives you the best opportunity, Tom.
Yep,
And on the
your
spot.
percentage move, you don't
They got
need
false breakout
that much
here.
to get above that 485, above the break even, but you do need a move to the upside of
It's
about
so-
6
it's so much
bucks
better,
to
bro,
get
like-
above that level and to start
Bro, I
seeing
had Fast Food once on this
profitability.
week,
And
nigga, and I
anything
was
above
sick.
that 485
Okay,
level
go
is
ahead,
going to
I'm
sorry.
be
never going back
profitability,
to
Diane.
Fast Food, bro.
All right, sorry, I jumped the gun there. All right, guys, good stuff. That's going to do it for us
Bro,
today
yeah,
on
sorry.
Fast Market of Diane King Hall alongside Kevin Hinks and Tom White.
Bro, he said all
Schwab
he eat
Network
is
app
vegetable
available in the App
cereal.
Store. Tune in 24/7 on
Vegetable soup, right?
schwabnetwork.com. Stick around.
Nah,
We've got
cereal.
Next in Investing coming up.
Make some green beans, throw it in a pot, and eat like some chicken broth. Mix it in with it.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of your checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Can't do nothing
Moving
right, right?
funds between your accounts is easy. Cash move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with
What happened?
Schwab Bank Investor Checking, the checking account built for investors.
What you talking about, sir?
Whose name that was on the phone?
Welcome to Schwab
This
Network,
little stock thing
where
is
real-time
something
market
that
coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
I don't know what you're talking
Inside the
about.
minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all
I
down
thought that
in
shit be
real
making
time
me
with
sick when you
speed,
be talking, bro.
accuracy, and precision.
I think one of the most important things is you're making a play in a
No text.
risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data,
Okay.
veteran traders,
Got all
and
my
trusted
vegetables
financial
out.
analysts. Streaming live.
Can't forget my jalapenos slices.
Schwab Network, streaming 24/7.
Bro, same thing with United Healthcare.
Anywhere.
Trade together,
free.
bro. They trade together.
SchwabNetwork.com.
One industry.
No, they don't.
Healthcare.
No, they don't.
They do.
Last year, my dad
They
had
do.
a
But one's
stroke.
cheaper than the
Big
other?
shock to see this person that I've
Yeah.
always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in
I
the
don't
car
think it's
together almost
awful.
daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial
see what it looks like on the big
consultant. I
time.
programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights,
name, Trey?
actionable
Put on
data,
them.
and market moving
What?
analysis.
Put on
Schwab Network
CBS.
connects the headlines to the why in
Put
real
what on
time. Watch
CBS?
free 24/7 at schwabnetwork.com.
Let me show you what I got.
I don't know, cuz I haven't looked at you yet.
I mean, resistance just yet. Retest and then break. It's getting close to it.
Welcome to Next Gen Investing, and of course, happy Wednesday, and more importantly, happy Fed Day. We are seeing some right now really wide felt weakness outside of the NASDAQ here as we do approach that Fed announcement now in about 60 minutes from now. I'm Jenny Horn, of course, alongside Alex Coffey. I'm getting too excited about these markets, Alex. I'm just skipping over us. But S&Ps are actually what I was watching here as we did breach
What'd you say,
7,000
sir?
earlier today. But really, since the open,
Hey, I
we've
like
just
puts on
continued to
CBS.
churn down and see these lower lows. But everything will be reset, I'm imagining, as we do get some more clarity from the Fed. But then more importantly, I think then really what we've seen in the past several Fed announcements will be everything we hear from Jerome Powell as far as forward-looking commentary, given some of the ongoing
hour
fray
to
between, of course,
FMC.
him and the broader Trump administration, just the ongoing geopolitical certainties right now plaguing some of the overall
Again, I
outlook
told
this
y'all
year.
about
All
the
right,
spot.
you sold me. I was about to say,
Nasty
like, have you
pullback
ever
at the
been less
resistance.
hyped for a Fed meeting? Like, not that it's that, like, you know, it's kind of
Who said- who
boring
said shut
stuff,
up?
but like, it's market impactful, no doubt. We talk about
Hold
it.
on, I'm gonna go see if my
Like,
check is here.
I like didn't remember it was the Fed day until I was like going through some of my morning routines and thinking about it. Like normally it's like on the calendar circled. I don't even think it's in. It might be third most important thing that is happening today.
I would even argue it might be the four. I mean, when you consider that we have Microsoft, Meta, and Tesla reporting earnings after the close, that's, I mean, 6.6 trillion worth of market cap moving hands after the close today. Apple with earnings tomorrow. I would argue
You can
it's
still pick up
behind
checks in the
all
mail.
of those companies as far as
Not always, but today it is.
Yes, yeah. Not always, but I think that the press conference. I mean, as we've said in just past Fed meetings, it's going to be more and more scrutinized given the broader outlook for, I mean, timing as well as the next rate cut and overall just inflationary trends. But yeah, I can't imagine that we're going to get any fireworks, of course, when those minutes
You know what we just did, right? We almost
jinxed it,
Yeah,
I
we
know.
assured that there's going to be some sort of big surprise and big movement. But I guess the reason that I just don't see the path to the surprise the same way that I think you can in other times. Like, it's a near certainty there will be no policy movement. So it takes one of the big pieces just out of the equation. So then it's like, okay, well, if nothing's really changing, how much different can the statement be? Probably not that different. And so then it's left to, okay, what is Jerome Powell going to say? And how is that going to be that different than the last time we heard from him? And so, like, I'm waiting to figure out how I'm wrong. I'm not so sure.
Yeah, I mean, benchmark rate expected pretty widely to hold steady at 3.5 to 3.75%. We will be, of course, diving into all of Jerome Powell's commentary once we get some of his real thoughts from the Q&A, of course, 30 minutes from that release. So two major events to look forward to in the next 90 minutes or so, and then we get the slew of big tech after the close, which I think will be definitely dominating at least tomorrow's price performance. But some of these big moves today we're seeing, and frankly, markets not necessarily reflecting a lot of these individual stories today. So we'll kick things off with broader tech coverage, broader semiconductor coverage, really following some specific news as well as earnings releases. We'll also be then previewing Lam Research as well as IBM after the close today for their quarterly reports. Also with some news after the close today. There's a lot going on after the close today, or this afternoon at least. We'll also then discuss Seagate Technologies. I mean, the rally is still full speed ahead. Earnings crushed estimates. Shares touched yet another all-time high, fueling the continued momentum in the memory chip space.
We'll also then be discussing what we're seeing actually from Carvana, as Gotham City Research alleged their profitability is largely illusionary, and right now their ecosystem leverage is unsustainable. So an interesting short report we'll discuss, as well as right now some broader expectations for some of these tech heavyweights. And we will close things out with, again, recapping some overall expectations for the Fed. So a busy day. I mean, it's one of those days where I cannot complain from a reporter standpoint. There's no shortage of news catalysts in the market today, although, again, not really being reflected by the averages.
Yeah, there is kind of a shortage, it seems, of these names that these short report issuers pick on, and Carvana is on that list. There's no question about it. You wouldn't tell from the price performance over the last year plus, but wow, yeah, this stock, it seems like every 6 months, this or Apple Oven, we get some sort of a bear trap, short report. So interesting stuff. Looking forward to that with Diane. But let's get into some of these earnings from yesterday, because I think this is where the movement is really stemming. It's this semiconductor world, as the SOX index up over 2%. When you look at Texas Instruments, we broke these ones live. It's not about the numbers for Q4, and they weren't expecting to be super strong. It was sort of like, hey, if you're in line, that's a win, but how close are you to getting out of this rut? And it sounds like it's much closer than the street thought.
Yeah, and I mean, so to speak to that, I mean, revenue missed, earnings missed. Revenue did still rise 10% year over year, but now forecasting revenue that was at the definitely more wide range that the street had been expecting, 4.32 billion to 4.68 billion. Estimates were around 4.4 billion. But at the midpoint, that would at least imply sequential growth, which actually was called out by Cantor Fitzgerald. That's something we haven't seen play out from Texas Instruments really fourth quarter to their first quarter in 18 years. So that's kind of fascinating to me. But this analyst also did call out the right now overall idea that the company could generate still between 9 to 10 billion in free cash flow next year, and the outlook helping offset some concerns around this miss, frankly. They obviously operate in the analog and embedded processing chip world. They have exposure to industrial automotive trends, also customers like Apple, as well as Ford, Nvidia. But Bernstein was far less enthusiastic, calling these results really decent. Now, CapEx should fall this year, which is to the benefit of free cash flow. But while Texas Instruments' business is finally recovering, in at least Bernstein's view, the uptick is not occurring as quickly as some would like. So acknowledging that, yes, this name had a pretty, I mean, it's only continued to propel higher actually in today's session. It has also been, though, a bit of a laggard in the broader enthusiasm tied to all things AI and, the broader analog world.
Yeah, Morgan Stanley pointed to the gross margin of 55.9% in the fourth quarter as a surprise. The data center business grew 70% during that quarter. Guidance was definitely better than expected. And, I actually thought it was interesting to see that this is a company that wasn't ramping up CapEx. If anything, it came in light. And it's like, okay, there is still some prudence out there. It's not just Apple that sort of scrapped the big spending plans. There's other companies out there that have done the same. So Texas Instruments may be being rewarded a little bit for that as well. Let's talk ASML. It feels like every time we talk about this name, it's around some sort of big earnings event. Sometimes good, sometimes not so good. Another not so good.
Another not so good, and actually our lone red name of the bunch today, down about 2.8%. And so they did see record sales. They also saw orders well above expectations, but earnings did miss, as they did say that orders were almost double estimates. I mean, there were also some weak spots within this report. So we did see that fourth quarter net bookings surged to 15.7 billion. Now, these are all adjusted to US dollars. This company does report in euro, but just for ease of understanding's sake, we did see that though their net bookings included roughly 8.8 billion in EUV orders, which helped lift their backlog to just shy of 47 billion, underscoring some of the customer investment in advancing these various chip-making tools. ASML does hold a near monopoly type grasp on lithography machines, which are crucial for manufacturing these advanced semiconductors. Basically, they use light technology to etch billions of transistors into silicon wafers, which is a key step in the chip making, the more advanced chip making process. But they do have right now TSMC as their biggest customer. We've seen a lot of the enthusiasm also as of late tied to TSMC's massive investment in production capacity this year and beyond, which has helped buoy a lot of the, again, sentiment tied to ASML. But Right now, as far as what really did not resonate so well, because obviously we're lower, they did flag explicitly tariff concerns, geopolitical risks, saying that right now they can no longer confirm these substantial growth rates in 2026 because of the broader global headwinds. Also did announce, roughly a $14.3 billion overall buyback program of their stock. That was a bright spot, but it does seem to be an overhang of right now how widespread their adoption can be. And one thing I thought was so interesting, because I was so curious about these lithography machines. On average, some of these machines, one machine can cost $300 million. For more of the advanced computing, that can be $400 million. So these are not something that are flying off the shelves by any means, but you have a price tag of that nature.
Yeah, this to me seems like one of those situations where the results in terms of the stock price wrote the headlines, in the sense that, earlier the stock was at record highs. It was up like 7-8%, and it was like blistering report sends ASML higher, and then it's now hey, maybe the stock's overheated a little bit and it's turned lower despite good results. So it's sort of, we're curve fitting here. These stocks have had such incredible runs. The fact that they're mostly able to maintain their value is a win for investors. So keep watching. We're going to talk Seagate later on, during the show. That's another name that I was really, really interested to see how it would trade today, and it's only gotten better. So ASML didn't have that luxury. Seagate has. That's going to be the story for the earnings season. Can the winners keep winning, even though that the bar is just astronomical for some of these record numbers? Just not enough. Nvidia, though, that's our topic of discussion next. This stock is always in the news, but it's been the news a lot lately because of China. So what's going on now?
It definitely seems like at least a positive development today, and shares are now up about 2% this week. So we're not seeing anything wild. Like, we'll be discussing Seagate later on, but China now approving the purchases of NVIDIA's H200 AI chips for the first time, giving authorization to several of NVIDIA's Chinese customers. This long-awaited, though, development came amid a trip from Jensen Huang to China. Plus, of course, we know the Trump administration did say late last year NVIDIA could be selling AI chips to Chinese companies, but there had been uncertainties whether Beijing would then allow those sales to even go through. But the first approval does cover several hundred thousands of these H200 chips.
I'm seeing more than 400,000. So what did they say they had in their inventory? Like 750 or something? So this is like half the inventory.
It's worth like $10 billion.
Oh my gosh.
It's ridiculous. But I do think that Beijing's decision is at least another sign of the overall just hopefully easing of tensions between Washington as well as the country. And again, the two superpowers had reached somewhat of a trade truce back in October, but the next leg was ensuring that actually these customers were even allowed to receive these chips. So it seems like that's
positive. Customers as well, we know them, and it's not like a wide approval across the board. It's ByteDance, Alibaba, and Tencent is what I saw. So I don't know if there was others in addition to that, but it does still seem to be somewhat case by case. But fortunately, the three that were approved, find a lot of them.
Yeah, I did see that they said some companies will be allowed to make purchases if deemed necessary. So yeah, it does sound like it's going to be like an a la carte type system. But hey, huge when you consider that right now, Wang did say that their market share in China for GPUs had fallen substantially, and then they're now seeing that recover, which is again just basically a net positive for any of their revenue growth, because that was not given in any of their expectations for now this fiscal year. We don't get those reports, those numbers though, until February 25th after the close. But our last name today is really the standout of the bunch. Micron has been just on an absolute run as of the last 6 or so months, but even more notably it feels like this a year so far, hitting yet another all-time high today. William Blair did really highlight some of the news we got Monday evening. That was their $24 billion investment in advanced wafer fabrication facility in Singapore over the next 10 years that could bring roughly 700,000 square feet of clean room capacity. Now, with NAND supply remaining tight and pricing seemingly to see significant increases, they do not anticipate this development to materially impact some of their near-term prospects. But NAND has become essential right now as a process of running these various AI models and data centers. The flash memory is non-volatile, which means that it can be used to store just data without power, and it is found on devices like flash drives, smartphones. But memory providers have been more reluctant to add capacity because of oversupply, which has actually been an issue that plagued Micron years back. So right now, companies have been able to boost prices because demand is so high, again, relative to supply. But now they're trying to, I think, work out the wiggle room of like being able to expand capacity while doing it without completely, I think, right now flooding the supply chain.
Yeah, these stocks, these memory names, I'm just going to say this is like a public service announcement. They go through or they have, that doesn't mean it's going to happen again, but they have gone through these boom and bust cycles. And even in this objective boom cycle, you go back to, looks like, mid parts of November, there was a 5 trading day stretch where this stock lost over 25, I'm talking about Micron, lost 25% of its value. Yeah, it recovered in like another 5 days, but this is not for the faint of heart. These stocks move swiftly, and although it's been largely to the upside for about 2 months straight now, it doesn't take much. These stocks can move in a hurry the other way too. So just know that if you're involved in some of these fast-moving stocks, particularly within this memory chip space.
I mean, yeah, I remember the days of that massive chip shortage where it was like that was a huge problem. And in Micron, it was still for so long. We would talk about this name, and I would say this is a recovery story. This was not an initial adopter of AI and all that enthusiasm. It was a little late to the party, but it has joined the party with velocity.
It's almost like gold. It was like, oh, you want gold because it's a safe haven. It's like, yeah, but it's like doing nothing. For like we were talking about this yesterday with our guests. It's like it does nothing for 10 years, then all of a sudden it is. The same maybe goes for these memory stocks.
I know the memory stocks are one that I just wish, you wish you would have been actionable, but I guess timing some of these cycles and the upside has just been frankly impossible, especially who would have thought that we'd continue to see this phenomenal upside really spurred by Seagate today. But Micron reporting in about 2 months from now, so we do have some time there for their major earnings as they're at the tail end of earnings season. But we'll leave it there for the top of our show today. Coming up next, we'll discuss some names with earnings out after the close that are not part of the Mag 7. Still very important names, though, for the overall tech space. IBM, which is seeing some modest weakness today, as well as Lam Research, which is up about 0.6% into their print.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals with our chart master, Rick Ducat, of course, joining us today to help us break down some expectations here for IBM as well as Lam Research. which are definitely taking a bit of a backseat to some of the major news we have coming in the next several hours, Rick, but still a great barometer on some of the trends we're seeing in broader AI and tech. So we'll start things off here with IBM, which is modestly lower today. And I will say that this name, from an overall just perspective here, has been just somewhat chopping around at these current levels.
Yes, what we've seen is an interruption of trend, I guess you could say here. If we were to look at our chart, what we see is that the blue trend line that began with these low points that we saw in September has been broken at this point. But at the same time, we've also formed a downward sloping trend, starting with those highs near 325 from mid-November or so, connecting these subsequent highs that we saw recently in early January. So now you couple that downward sloping trend line, our broken up trend line, but for the most part, we have stayed at a horizontal supportive area, 288, our green line there. That was a notable area where price stopped and started repeatedly. You could also expand that and say it was a supportive zone. So between about 288 to 295, that 295 level also marks some notable high points from back in June. That's around where price seemed to stabilize. We have fallen back within that boundary recently here. So that should be an interesting area to watch and see if we hold on and if that area can continue to show some resilience here. So if we were to break downward, though, that 288 level could be that potential tipping point. If when we advance to our next chart here, our moving averages that we follow, we can see that our faster 5-day EMA in dark blue is crossing below the other counterparts here. It's starting to overtake them, which is a sign of trend degradation, of shift and acceleration toward the downside here. Moreover, though, things are clustered together rather closely, 295 or so to 299. That's where we have our three shorter-term moving averages, so that gives us a bit of a confluence to be on the lookout for as a potential breakout point or a resistance stumbling block here. If we were to overtake that area, that could result in that kind of breakout price activity that you get when the buyers overwhelm the resistance and the cascade of orders starts to take shape here. So another area to look at for this chart is our RSI study. We can see that's trending downward here, kind of following our price activity, perhaps on the verge of breaking out to the upside there, though, as well. Finally, when we look at our last chart, our volume profile study, we can see that our volume nodes come in near 305 to the upside, and about 280 to 285 or so to the downside. Those are the heavy trading congestion areas that you could see prices start to solidify if they reach that lower boundary. That'd also be the breakout level to be on the lookout for to the upside. So some interesting areas to consider.
Yeah, and as we are discussing it here, so flipping slightly positive, so seeing markets perhaps firming up ahead of this Fed announcement. So appreciate that, Rick, for that rundown on IBM as we do approach this earnings event. And Alex, I will say that from looking at the market maker move from an option standpoint, it's expected to make about an $18 move. That's a pretty big move for IBM.
No doubt. Looking for that potentially to happen to the upside for this particular example. Looking at a call calendar spread, selling Friday's expiration, buying next Friday's expiration around the 312.5 call calendar spread here. Dollar debit means you have $100 in risk. Nice, easy number to remember. But you'll need some movement. You'll need it to the upside as well from IBM. If you add 18 to 294, you get what? 312. So math works out pretty good.
Math does work out pretty good. I love when that happens, when it's simple math. But now to shift gears here and look at Lam Research, which is getting more of a lift today, tied to some of the enthusiasm with these earnings reports that we've already gotten. But as far as Lam Research is concerned here, Rick, walk us through what the technicals are showing you, because again, I know taking a bit of a back burner to the Mag 7 names, but Lam Research has been one that can be interesting on the back of its earnings.
Yeah, for sure, and a pretty strong chart. Certainly nothing you'd want to overlook if you're a momentum trader is the recent activity in this name. So what we've seen since our past quarterly earnings previously in October, we saw that after an initial bounce, we retreated back to a supportive area near about 135 or so. But then the rally has steepened. First, we had our blue channel between our two lines there from November to about January, and then we sharp push. Now we have a slightly steeper channel to be on the lookout for. They don't exactly line up in terms of our old trend line helping provide a boundary in this case here. So that we would be on the lookout for to the downside then. The area in question would be about 228 or so. That was our low point that we established after a recent gap to the upside. Beyond that, 211 and 177 as well. Those are some notable downside areas to be on the lookout for. When we do advance to our next chart and look at our moving averages, this is one of those situations where it's not super helpful for the moving averages in terms of finding support or resistance. In this case, support during an uptrend. The dark blue 5-day EMA is the closest we've got. That comes in near 231. Not too. It's a bit of a stretch even away from current price activity. Our longer-term moving averages are quite far behind as well. So these lagging indicators, this is kind of the inherent problem with them, is that when you do have strong momentum, they can take a while to catch up here. So keep that in mind. RSI, however, showing more of an upside breakout as well. We are breaking above our downward sloping trend line and re-entering that overbought area, that threshold of 70. So that gives us another bullish signal to consider in terms of our momentum indicator. Finally, our volume profile study on our next chart shows the nodes, the key areas to watch. To the downside, the nearest one is around 220 or so, 220 to 225 roughly. That's an area where we saw a small bump in our trading activity, but the more prominent areas to the downside include 161 and 145 roughly. Those are the heavy trading areas if things were to kind of let some air out of the balloon, and if we were to fall back to some of these prior areas of importance.
Yeah, I mean, definitely helping that this name has rallied now about 10% on the week, but obviously a lot of that could be changed as we, of course, approach the volatility that is all things earnings. So appreciate it, Rick Ducat, our chart master, for a fresh look at the technicals here into these earnings events. But now, as we think through trading this name, I actually didn't realize that we're up 222% over the last 52 weeks. So maybe taking that into consideration that we have been on a tear in Lamb Research.
Yeah, 1 week moving average is around 231. I think Rick pointed that out. Using that as potentially a first line of support to the downside, I looked at the 230, 227 and a half short put vertical in this week's expiration. So this is a neutral to bullish strategy, Jenny, looking to collect a credit on this spread. Typically seen as high probability, but we do acknowledge that earnings volatility will have a lot to say on whether this example will ultimately be profitable by the end of the week. With that being said, if you collect 50 cents on the $2.50 wide spread, it creates a 4-to-1 risk reward. You risk $200 with a chance to make 50. Break even 229 and a half. So you simply take that 50 cents away and you're left with 229.50. That's your break even. Looking for more of the same for LRCX, looking for maybe a Seagate like response, but you don't need it. You actually just need this stock to hold court and stay where it is, and if it does, this will be a profitable example by the end of the week.
Yeah, and Lamb today also having a pretty decent session, of course. Actually, giving back some of that strength. We're pretty much unchanged here, but still a 10% climb this week. Not about a week as we do approach that critical test of earnings. But we will leave it there for Chartmaster today. Coming up next time to talk another big earnings mover of the session, and that is Seagate Technologies, which now is up 20.5% after a blowout fourth quarter.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we're looking at a name that is so clearly to the upside, definitely evoking that FOMO feeling, Seagate Technologies, which is up 20%. Joining us is Marley Caden, host for the Schwab Network. And so, Marley, I think that there was skepticism about the run this had been on going into this report. How could they possibly deliver? But this is always a great example of just because you're at all-time highs doesn't mean you can't continue to climb another 20% following earnings.
Certainly. I mean, people were looking, say, if you're up 100, if you're up 300% in the last 12 months, you know, the expectations are so high here. And Alex and I were actually covering these earnings live on air yesterday, and there was a little bit of that reaction. We saw some seesawing, even though the numbers were really impressive as the digestion period happened. But now that things have settled, we are seeing this 20% move to the upside on this really impressive quarter for Seagate, where the bar was set very high for them, adding to this massive run-up they've already had. Seagate reported earnings of $311 for the quarter. That's up 53% from the year earlier. Also significantly beat the expectations for $283. Analysts were forecasting that for sales. They were looking for $2.74 billion. That beat by more than 21%, came in at $2.83 billion. So Seagate, as you probably know, leading maker of hard disk drives. They compete directly with Western Digital. Both of those stocks were S&P leaders last year as data center developers race to secure these HDDs that they need to serve AI demand. And management at Seagate says that that demand is not going anywhere. We got some commentary from the CEO, Dave Mosley, saying that they, quote, "We continue to operate in an exceptionally strong demand environment, particularly within the data center end markets. Based on our build-to-order pipeline, we anticipate these positive demand trends will continue for some time." With that said, their guidance also came in really strong for the current quarter. They're guiding for sales of $2.9 billion at the midpoint of the range. Prior to the company posting results, analysts were looking for $2.78, so considerably better than the expectations. Company guiding for earnings of $3.40 per share. That was compared to forecasts calling for $2.99. So again, better than expected top and bottom line for the quarter, better than expected projections for the coming quarter. It really doesn't get much better than that. And I think the question was it going to be rewarded? Because we've seen the alternative this earnings season, but this report was just so strong that it is being rewarded, and to a huge upside, now up more than 20%.
Yeah, and analysts were kind of fawning over this after my favorite. We talked about this on Trading 360. My favorite quote was from Eric Woodring over at Morgan Stanley, saying, quote, that he continues to be amazed by the strength of this HDD cycle. And like, I even just said, like, I am too. Like, these moves are incredible.
I mean, this is now, I was just looking at this, like, I know it's only been, you know, like 20-something sessions of this year, but this is now at least basically tied with Western Digital to be one of the best performers of the S&P 500. And I mean, you look at the move, I don't think any of us could have predicted that after the phenomenal run we saw from 2025, that we would continue to be up another 60% so far this month.
It is really, and I think some of the analysts, as Alex is citing, are using much more extravagant language than we're used to seeing from them. They're amazed. Evercore ISI also upping their price target, saying that they believe they're well positioned from these secular tailwinds in AI. They've got this favorable demand-supply backdrop for them, improving power mix. We got Wedbush coming out, reiterating their outperform, upping the price target to 430, saying that revenue and margins expected to continue for the foreseeable future. There's no reason to modify a constructive opinion. Also got TD Cowen upping their price target. So, I mean, we already had bulls here. The bulls are even more bullish now.
Yeah, and I mean, frankly, unsurprising when you consider some of the overall expectations now for, I mean, like their progress in not only just hard disk drives, our favorite term ever, but also now in HAMR with this technology that is
heat-assisted magnetic recording.
I know, I love.
Does that help you at all? I don't know. It doesn't help me much.
It
But
doesn't help me much at all, but I did learn that it's pronounced hammer, not like the way I was saying HAMR for quite some time. But I mean, now that has also been a point that the CEO mentioned of strength going forward. And so that's another emerging aspect of their business that is not just a pure play into hard disk drives, for example. But I mean, as we do look at the overall supply demand dynamics, as you mentioned, Alex, there's a nature to this overall space that is oftentimes volatile. So it does, I think, then give the pause of like, can we see this momentum continue?
yeah, and the thing is it's really, really difficult to call the top in something. These moves have become almost the exact definition of what we're trying to discuss here on FOMO, which is these emotional, momentum-driven rallies. But you can't knock a company for succeeding, and that's really what Seagate and many of these companies within memory chips are doing at the same time. So they're supported by technicals, they're supported by fundamentals, but there's certainly an emotional FOMO-esque move to this as well. And just quite frankly, I mean, these stocks have gotten way more expensive, not valuation-wise, but just per stock share. And that makes it a little bit more difficult for smaller traders to even be involved with them as they've just gotten so much more pricey. But maybe you look at a risk-defined option strategy like a call butterfly spread or something to get a little bit more accessibility, still control your risk, but you can still, position yourself to benefit if this move continues. So that's what I looked at for this example. It just goes out to February 6th, so it's not this Friday, guys. It's next Friday. And we're closing in on a big round number, so that'd be a big milestone. We just talked about S&P 7,000 today. What if we get a Seagate 500? And so if we get Seagate to 500 by the end of next week, a 490, 500, 510 called butterfly spread, then maybe you buy for around $1 would be in position to benefit quite greatly. And this is not a high probability of success trade, and it should be indicated by the fact that you're risking 100, but you can make 900. Whenever you see that relationship get very favorable to the investor, we should assume, hey, this is probably something that needs a lot of things to go well, and that's what you need here. You need this stock to end up between 490 and 510, with a best case scenario that it centers around 500. Oh, and it has to happen close to the end of next week. So a lot of